Okay, it says I'm live. Let's center this. All right, I'll just wait for my confirmation from YouTube. And we have a whole bunch of questions in the chat already. It says I am live. Okay, so this session is going to be questions related to CFA, the CFA program, and of course anything that Serify offers through markmeldrum.com, how the applied level fits in with all of that. If there are any questions about that, I'm not going to push it on you, but if there are questions about it, I'll answer them. So we'll cycle through. What I'm going to try to avoid are questions that aren't related to CFA. So if I don't read your question, it's just because it wasn't related to the topic of the evening. Let's see. Trying to get into wealth management. Wondering if CFA is the right certification to get. I believe for that, the CFP is the way to go. CFA spends a lot of time in valuation of asset classes. Level 2 is a full valuation level. This level 1 would be helpful, I think. Level 3, less so. Level 2, probably not. I think CFP aligns more with private wealth management than CFA does. One certification is not for you. Do you think it's still good to at least finish it when you've passed 11 of 15 exams? Yeah, you hate leaving things undone, right? Especially when you're so close to the end that you think, well, 4 more exams and I'll be done. But if it's not something that you're going to do, if it's not something you care about, then it is whatever incremental amount of stuff you have left is wasted time. In capital budgeting in corporate finance, one of the things that we learn is to ignore sunk costs. So we don't decide between two pathways by saying, well, I've already spent so much money on this one project. We ignore sunk costs and we just look at future cash flows. If you don't see yourself doing anything with those particular letters, it is a waste of time. I spoke with somebody who didn't get through level 1 and said, well, I'm going to write level 1 just to pass it, but I'm not interested in this. I said, well, then why bother? For bragging rights? I mean, if you're not interested in finance, why even bother? It's okay to walk away from things once you decide that they're not from you. We do this all the time. Think about all the friends you've had through your life that have come in and out of your life. We can't collect all of them. We can't complete everything. If it's going to bother you, if it's going to be like, I was so close to the end, I may as well have just finished. If it's going to bother you, then do it. But if it's going to take 6 months or a year, I don't know how long that stuff takes, and you're never going to use it, then it's why would you bother, right? In terms of knowledge, how far would you say the CFA gets you? Quite far. The issues I have had with the CFA content over the years have been the reducing the technical content. And I don't know if that's a function of me or if I think that that's just a bad thing. But when I go through a reading and I think, but you've taken out all the richness, all the stuff that I'd be interested in, I get a little bit turned off because I think, well, now it's kind of just a boring reading. What do you need me for, right? And then it's the move away from vetted. Hang on a second here. Let me take care of something. From vetted authors and a deep bench of editing with the Wiley authors, not Wiley CFA, but Wiley, the publishing company. Most of the readings historically had been from Wiley textbooks and Wiley authors with a deep bench of editing, and to go to no bench in editing. It's not that easy to do textbooks, the amount of editing that needs to be done. CFAI doesn't have that in place. So to give you an example, when a new textbook is issued, it gets sent to every chapter, or 3-4 chapters will get sent to 10 different professors. So 30, 40 professors will look through a textbook. And we do this because we get points as part of our contribution to the profession. So we look for these sorts of opportunities to review chapters, to do this sort of thing. So it's a deep editing process. Well, you're going from that to nothing. How are you going to get 30, 40 people who are all experts in a particular topic to review your chapters, right? So mistakes leak into the readings. Those are my big issues with CFA is the lack of good quality writers, and I'm gonna call it the dumbing down of the content, the reduction of the technical material. Other than that, if you were looking to develop a skill in finance that was broad, and that's what a CFA designation is. It's not a specialist designation, it's a generalist designation to give you a general overview of the entire field. I don't know that there's a better collection of content than the CFAI readings. I would lean more into the technical things and probably vet a few of the writers a little bit better. A few, maybe more than a few. But other than that, in terms of knowledge, I think it's fantastic. Do you think quants will take over finance and turn finance into an applied math field? No. The more quantitative analysis that's done, all these models are going to be looking for along the same things. The return on the models will disappear, will become minimized. So no, not really. Given the booming rise of quant funds, MFE programs, and eventually dilute the value of the CFA, I don't think so. The quant designation, or the quant approach, still relies on a deep knowledge of the relationships on the balance sheet and the income statement, the cash flow statement, the relationships among valuations, because you're looking for valuation discrepancies. You're looking for some theory that suggests that something's going to outperform. Well, unless you have some kind of economic or financial background in that, it's not like you can pluck a computer science graduate and say, do this. The first question would be, well, what data should I look at? Without a theory of how you expect the economy to function, or without a theory of the relationship between variables, or the relationship among prices of related variables, and how out of line they can get, whether when they get out of line, do they mean revert? Is it cyclical? Or is sometimes there are structural breaks in relationships? Oil and natural gas had a tight relationship for a long time, and then that broke 15, 16 years ago. That relationship broke. You need some kind of theory, some kind of understanding. So I don't know that you're going to be just a pure stats person or just a pure comp sci person without having a finance person on the team. So a finance, a stat, and a comp sci person, now you've got the basis for a quant fund, right? Do you think quants will take over? No. With firms pushing overtime and cost cutting, how can candidates realistically handle 300 plus hours of CA study per level? The raising of the bar is not new. This is not something that just, the recent generation is going to see. Cost cutting and overtime is not new. This has been going on for decades. Each I'm not going to say decade because I don't know what it is, but each cycle has more efficiency in it. The bar gets raised over time. It used to be a case where in the 50s, if you were a high school graduate, you went off to the business world, you got yourself a job, you worked your way up. By the late 60s, early 70s, it was a business degree. By the mid 80s, it was an MBA. In the 90s, it was the combination of an MBA and an engineering degree. That pretty much set you up in a lot of places. Now it's an MBA, some coding, a couple of languages, work with some AI models where you know how to prompt an AI. So the bar continually raises. This is not new. What you're pointing out, that, okay, there's more overtime, there's more this. How do I fit time in? How did anybody fit time in? Now, when you go back 30 years, you say, well, the bar wasn't as high as it was today. No, but we didn't have the technology that you have today, right? You went to a library. You went to the university library to do your work. You couldn't just Google stuff. You didn't have a whole global library at your fingertips. You had to spend a lot of time getting any data you need. You didn't have a lot of instant data at your fingertips like you do now. So sure, the bar is higher, but the access to everything you need to clear that bar is also higher as well. 30 years ago, if you were doing CFA, you had to rely on your local neighborhoods. If there were no CFA live classes anywhere in your neighborhood, well, then you did self-study, or you had to travel to another city to get it done. Now you go to markmeldrum.com and you can get level 1 for, what is it, under $400. All the video. That wasn't a possibility 30 years ago. So it actually took more hours 30 years ago because you had to read and figure everything out yourself. In 20 or 30 years, the next generation will see, oh, with all of this, this and this and this and this, how am I going to get this stuff done? Well, look at all the technology you have. Ask your robot. Your robot's standing right there. Ask your robot, right? It'll be one of those things. So I don't know that I would say, I don't know that I would lean too much on this as oh, well, yeah, you've got a point. How are you going to get that done? It is, listen, if we really care about something, we make time for it. You could ask the same thing, by the way, as this with overtime and hang on a second here. When you don't talk for a while and you start talking, right? You could say, well, with overtime and all the demands of the job over the next year, where am I going to get 300 hours to watch the 6 shows that stream on Netflix? Because you'll spend about 300 hours. If you watch sports and you watch two different sports, you watch football and you watch baseball, where am I going to come up with the 300 hours to watch all the games this year, right? So if there's something you want to do, you'll find the time to do it. Where am I going to come up with and this is more than 300 hours per year to go to the gym? You make time. If it's something you care about, if it's something you want, you make the time. So the bar is always raising, but your ability to get over that bar also raises with time. And as far as coming up with time, what are your priorities? Are your priorities the games and your shows that stream? It's I got to watch Squid Games. I got to watch House of the Dragon, and I go to the gym. I don't have time. Well, something has to give. You must sacrifice something. This is the limitation of being human, is that we cannot scale. To do an hour of output requires an hour of our time. We cannot scale. So we must trade off. We must have priorities. We must have a list of what's important to me and what am I willing to sacrifice to get it. If it's not important to you, then watch your sports, go to the gym, watch your streaming shows. I'm making generalized statements, but to say that none of you watch streaming television would be an odd statement, right? You find the time if it's important to you. Should CFAI introduce more flexible or modular pathways to accommodate modern work-life balance demands? No. Um, I no. I'm gonna say no on that one. I don't think so. I think it is if you get a job. Look, let's just say some true statements here. There is no other profession in the world that pays as much as finance. Period. The higher you go, the amount of money that you can make in this profession, this is where the money is. There is no other profession in the world that pays as much as finance on average. Okay, this is where everybody wants to be. This is where you can really make big money. But it's hyper competitive. It is super hyper competitive. That if we have a ramp that is modular and easy and balances work and life, by the time you get thrown into that environment, you're going to get eaten apart because those are sharks. So you're not just training for a profession, you have to train to be a shark. You have to be able to survive in that hyper competitive environment. Period. Should we make hockey camp easier on the kids? Well, you could, but you're not going to produce any NHL players, right? Should you make med school easier on the doctors and make it more modular? Well, you could, but you probably aren't going to produce top-notch doctors, right? So some things I would say no, and this is one of those things that I would say no. It would be doing you a disservice to lightly prepare you for a wickedly competitive cutthroat industry. It just would. So if you don't like the pace, if you don't like the time commitment, you are not going to like the field of finance. Now, wealth management might be a little bit better because it's probably less demanding and less cutthroat in that sense. Um, not that it's not competitive, but it relies more on relationships and building relationships over long periods of time to build your book, as opposed to you got to get a deal, you got to make things happen right away, you got to make it rain, right? I don't know. I've never worked in wealth management really, so maybe what I've said wasn't entirely correct. Somebody who's in wealth management can correct me and say, "Are you kidding me? You know how many hours it takes to relationship build? Maybe it is. Maybe they are 15-hour days, right?" What level of CFA would you recommend for someone who is venturing into the applied series? Should they have at least completed level one? I don't think so. Now, the applied level is being split into two. So if you take CFA, the CFA Plus at markmeldrum.com, you get paired with applied analysis because you'll spend level one and most of level two doing analysis. You'll spend some part of level two and almost all of level three doing asset management. So that's why I paired them that way. So if you take CFA level one plus, you'll get applied analysis. When you get to level three, if you take the plus, you'll then get the applied asset management. It's developed in such a way that it complements the CFA very closely, right? It applies a lot of what you've already learned, especially in financial modeling. There is a financial modeling practical skills module with CFA level one. It uses manufactured data. I use real data, and I'll be adding to that series as we go along. And then there's the sector studies and the the sub-industry studies, so that by the time you're done level one and part of level two, you should have a good understanding of every sector of the economy if you're following sector studies, and a very good conversational level of knowledge, conversational with, let's say, a mining analyst. You'd be able to carry your own, so that when you're sitting in an interview room, it's not that you're just a level one or a level two, but if somebody asks you about the mining industry, you can answer. What about utilities? You can answer. What do you think of cybersecurity? You can answer. What do you think of telecoms? You can answer. Because you've gone through understanding telecoms, understanding cybersecurity, understanding Bitcoin miners, understanding healthcare. the healthcare value chain, understanding semiconductors. All of these, I think, are extremely valuable. I'm surprised there isn't more of this in the CFA curriculum. But if you have no CFA training at all, you should be able to start watching a video on understanding gold mining and say, okay, well, now I understand gold mining. You should be able to understand it without having the background. The hope is that it will addict you into wanting to know more, and it will draw you in to the CFA program. Because the combination of the CFA program and the applied level will make you a very good retail investor. The CFA is really geared to the institution. Doesn't have a lot for the retail person in there. It's really geared to the institution. Level 1, institution or retail, I think is a fair statement. Level 2, well, I don't know that many retail investors are going to be valuing derivatives or valuing bonds with embedded options. But the quant, the FSA, the corporate issuers, the equity, valuation of equity, a couple of readings in fixed income, some of the derivative stuff when it deals with options, some of the portfolio management stuff is relevant for a retail investor. By the time you get to level 3, less so, especially the parts on immunization and institutional investors going through pension funds and all that, less so. But the applied level in combination with that really helps get you set up if you want to pursue a retail, I'd call professional retail pathway. Recent CFA curriculum materials contain noticeable errors. It's true. Are the authors properly vetted before publication? I imagine they're vetted. What is missing is the deep editing bench. Without editors, you're going to have mistakes. I know that when I write something, if I leave it a couple days, I come back to it, I go, oh, what have I done here? I find every time I review it, I find mistakes that if 10 other people that were just as informed as I was read it, they might point out that, well, you got a leap of faith here. You're going from this sentence to this sentence. It's not quite clear. That's what's missing. I don't know that the vetting is the problem. It's the deep bench of editing that's absolutely critical. For textbook publishers, contacting professors in a university saying, would you like to review 3 textbooks? Doesn't cost the textbook publisher anything, because they know we have to have some kind of contribution to the profession. So there's contribution to the school, contribution to the literature, contribution to the profession. There's 4 areas where you get points. Reviewing book chapters gets you points, and you're on your way to a tenure position. The biggest thing is publishing, but in some other schools you can work your way up with all of these little points. So they get dozens of reviewers per textbook because it benefits us to do it. We have it on our CV. CFA would have to pay. It would become very expensive to get that kind of review in. Some candidates feel forced to use prep providers due to curriculum inaccuracies. How should CFA tackle this credibility issue? They do fix mistakes as they're pointed out. The problem comes in this. By the time we get the content, because we get it early to prepare for the release date, the window from the time we get it to the time it's released is very small. And then you compound that with a bunch of errors, and it is expected that we would find an error and we would report the error to them. It's time consuming to report the error. It's very time consuming. We don't have the time. To get it done. So a lot of it goes unreported. It's not just us that don't have the time. Everyone doesn't have the time, because we only have like 8 weeks or 9 weeks from the time we get it to get it done. It's not like we have 6 months. I've advocated for saying, why don't you include us in on the review process when you're just going through editing and reviewing include us in at that time. Give us more time with the readings in exchange for us helping you out. The other thing that you could do is when you're posting all of the corrections, post the name of the company that issued the correction, so that as candidates are going through all of the corrections, they can see markmeldrum.com, markmeldrum.com, markmeldrum.com. I would be so motivated to give them all the corrections if every candidate saw that it was me pointing out all the mistakes. Do you get what I'm saying? There is no carrot in there for me. So if there was a carrot, you could build a carrot into the system. If there was, you would get some built-in editing as we go through it, because you have dozens of prep providers going through the readings. We're going to find almost everything. And we do find almost everything across the whole community. But again, where's our motivation to stop what we're doing to help you out after we've paid you? And I'm not going to tell you what we pay, but my God, we pay. After we paid you to get it early, you got to give us something on this side, right? You got to give us some reason why we're motivated to do it, given the short window of time that we have. But that would fix it. That's one way I would suggest that it could be fixed. In Ontario, many jobs mandate CPA, but barely CFA. If you're going to be an accountant, you need a CPA. If you're going to be in finance, you don't need a CFA. See the difference? If I'm going to put a shingle out and say, I'm an accountant, I'm going to need to be an accountant. I can't just say, oh, I know a lot, don't worry about me. I'm not an accountant, I'm a bookkeeper. If I'm going to say I'm an accountant, I need those 3 letters. I need them, right? If I'm going to be in finance, I don't need those 3 letters CFA. I don't need them. That's the big difference between why there are more people getting the 3 letters CPA rather than CFA. Where are we here? Do you think other designations will outcompete CFA? Well, other designations are outcompeting CFA if we think about it by numbers. For example, CPA gets thousands of students per year in Ontario alone. This is true. But again, it's something you need, period. What's your approach to studying more abstract concepts like derivatives versus easier ones like portfolio management? Coming from an L1 candidate, would you recommend different study strategies? Well, I don't know that that's a good question for me, because I don't find derivatives abstract. I find it very concrete, period, because it is mathematical, and every derivative is nothing more than time value of money problem. It's just it's just moving money around on a timeline, so it's all at the same point in time. So you have a future price and you have a spot price. Well, you had to get the future price. How did you get it? Well, if you had to carry the spot price forward in time, what would the future value be? There's a futures price. So if you get halfway to the futures price and you say, well, what's the value of the futures contract? You must first bring this forward to figure out the profit, then bring the profit back to this point in time, or bring this future price back to here and calculate. It's all just time value of money. It's all just moving things around on a timeline so they line up. So for me, it's not abstract at all. It's actually extremely applied. So I find something like portfolio management more abstract because it's purely theoretical. There is no optimal portfolio in a deterministic absolute sense. There is only an optimal portfolio in a theoretical sense, and no portfolio will ever actually be optimal because it's built on a whole bunch of assumptions about expected returns, expected correlations, expected volatilities that are probably, if you're looking at 5 different asset classes, the idea that you're going to get all of those assumptions dead right, forget it. No one has an optimal portfolio. It's only optimal based on what you think is going to happen. Does that actually happen? No, not really. Not 100%. Maybe 6% of what you guess will actually happen. So I find that to be more abstract than derivatives. Fresca, it's the best. It really is. All right. Oh, I didn't answer your question though. What would you do? What would you do if you find it more abstract? Slow down. Talk your way through it. Imagine that you have to teach you've got a derivative formula and you don't quite understand it. Imagine you didn't have that derivative formula and you just had a timeline with money at different points. Use time value of money to move them around, and you'll know what you'll create. The very formula you're looking at. It's just time value of money. But imagine teaching it to somebody else. Just try to explain it to somebody else. It reinforces it in your mind. Um, that's what I do. Some things that are abstract, sometimes the source that I'm learning it from is not enough. So I'll read it and I'll go, I'm not getting it. I'm not seeing it. I'm missing something. That if I go on to Google and I start Googling around to look for other explanations, or even on YouTube to look for other videos, somebody may explain it in just a little bit different way where I go, oh, that's the missing thing. That's the thing I was missing. Okay, it's zero to begin with. Now I get it. Okay, that makes sense. If you're finding it abstract, it's probably because you're missing some little thing that if it clicked into place, everything would lighten up for you. CFA has no doubt has tremendous value. Yes, and is super rigorous, especially versus other designations. But when these designations are structurally incorporated into the system, CPA, CFP, how does CFA, and how does CFA, compete? Well, this has always been true of even when I was an undergrad. Back then it was CGA, certified, a chartered general accountant, not a CPA. And there was a CA, which is just chartered accountant. And then there was a CMA, management accountant. I don't know if that still exists, the CMA. But if you, and I was an accounting and finance major. I was, I was part of the honorary accounting society. I thought I wanted to be an accountant until, and I did all the accounting. All that was left was auditing and tax. And I thought, I don't want to do this. But you would have had to have written the exams to get the designation, and you needed that to be an accountant, period. So it wasn't that it was just that it was integrated, because CFA was available as well on the finance side as an option, but it was a requirement on the accounting side. There is a difference between the two, right? If it's optional, you're not going to get 100% throughput. But if it's required, anybody who's an accounting major graduating who wants to go on to be an accountant must take it. So the numbers are bigger. Do you think Canada quality is a factor with universities having customer business relations? Yeah, once you start thinking about your student as a customer, as opposed to a student, that becomes a problem. Most students get intimidated by CFA due to watered down education. Well, that's an interesting point. I wonder if that would work with me, right? So I have a certain level of ability that ever since I was a kid, I was aware of. I always scored in the top 3 in every class I was in, sometimes 1, sometimes 2, sometimes 3, but I was always consistently at the top. Was I intrinsically motivated regardless of the content that was put forward, or did the material at times demotivate me? Did the level of teaching, if the level of teaching had lowered, would I have studied less, or would I have studied just as hard? In other words, would I have just gotten a whole bunch of A pluses, or would have I just said, this is would I have lowered myself to the standard that was being taught and then suddenly been afraid of something harder? I don't think so. I think if I had it within me to work less and I was given permission to work less, I would. And I think that is probably a bigger problem. I mean, um, yeah, okay, I can see that that if universities are lowering their standards, it's giving students permission to work less. The ones that want to work less, or that would be predisposed to work less, would, but that doesn't mean the whole class will work less. It just means those that are predisposed to working less would. But even with the higher standards, there were students who were more than comfortable with C's and D's, more than comfortable with C's and D's. I don't know. I'm a little hesitant to blame the quality of the student just yet, but I think at the margin, maybe. Okay, I'll skip that one. I'll skip that one. I'll skip that one. The news about DeepSeek. It's time to start thinking about short. Oh, okay, I'll skip that one. I thought it was going to be CFA. Bitcoin. I'll skip that one. I'll skip that one. Skipping a lot. I think CFAI has utterly failed in implementing new ideas. The new practical skills modules lack substance and feels like I'm watching HR training videos. Pathways feel incomplete and dumbed down. Well, I've only watched one of them. I haven't watched the Python ones or the ones at level 2. I just watched one of them. So I can't really comment on it because I'm watching it more from an evaluation perspective than I am from a learner perspective. So I can't really comment on that, but I don't think that's a question as much as it was a comment. Designation feels diluted, but the costs have increased. Yeah, seems other designations are facing the same issue. Noted CPAs having less candidates as well. However, their supply is accounting undergrad students, so issue isn't unique to CFA. No, I think the big issue for CFA is the job market. By far, the comments under both videos that I put out concerning the drop rate and enrollment over 5 years is consistent that the job market is just awful. It's been awful for the last 2 years. With a rise in interest rates, it probably slowed down private equity a hell of a lot. And as far as other countries, like China's in just a shrinking space. Rise of passive investing probably made active less attractive. Although when we say rise of passive investing, almost sounds like active is shrinking. But I think it's just that as a share of a growing assets under management, passive is a larger share, but that active isn't shrinking, active still growing in assets under management, just at a slower rate than passive, perhaps. So I don't know that that's an explanation. I think it's a combination of, for 2023, just a terrible job market. And if you rely on your employer to pay for your CFA, if you have no employer, you're not paying for the CFA. And then over 2024, the strong dollar, and the increase in pricing, which probably put it out of reach for a lot of emerging markets, and a lot of the growth segment comes from there. I think if you take those two big ones, the job market sucks and currency issues, it probably explains quite a bit. Right now, there are 28 jobs open for candidates in CFA website. Isn't the number low compared with the population? Aren't good job opportunities in Canada for a CFA charter holder? I think Ontario has more charter holders than New York State. There are a lot of charter holders in Ontario already, which tells me that there's probably a very large employment base in finance. But the job market sucks, and that wasn't unique to Canada. It was everywhere. Would you ever do a series on teaching math like calculus? Not really. I don't know why. There's really no calculus in finance. So I don't know why I would do that. Given quant skills are becoming increasingly important in the modern world. Well, for that, you're going to want stats. Lots of stats. Not higher level abstract math like calculus and things like that. You're gonna want math. I mean stats, big time stats. In U.S. number is 820. Oh, for jobs 820. Keep in mind the difference between Canada and the U.S. Canada has 6 major banks and a bunch of smaller trusts and co-ops. The U.S. has what, 4,000, 5,000 banks, 8,000 different funds. It's not just 10 times what Canada is. The finance industry in the US is probably 30 times, 40 times, 50 times what Canada is. So 820 versus 28 is not unrealistic given just the sheer size that you have in the US. Do you read the 10K on the computer or on the iPad? Depends on what I want to do. If I'm highlighting, it's on my computer because I want my mouse and the highlighter, and I just make it really big. I got a big screen. I make it really big, and then I could just scroll and do whatever I want. Sometimes I want to go sit somewhere else. I don't want to sit in this chair and stare at a computer screen on a desk. So I'll have it on my iPad, but I find it hard to highlight things on the iPad. So it's just for general reading. And then if it's something that I like, I know that I have to, on my next session, sit and review that section and highlight the parts that I wanted. In academia, standards have lowered. We see this with MBA from elite schools not finding jobs. I don't know if that is a function of standards being lowered or of recruitment down. Designations hold value since they don't bell curve. Maybe CFA still isn't fully recognized. Well, I think that is probably something. CFA is also massive time commitment, but so is anything. So is an undergrad. It's 4 years. So is an MBA. It's an extra year to 2 years. Everything's a massive time commitment. Employers almost view it as a threat when you tell them you're studying for it because they think it'll mean you won't have time for them. Do you think that's what they're thinking? One comment I read based on the videos I put up was that as far as an entry level position, it's not a deal maker. Oh, level 2, oh, you're in. It's not a deal maker. But at higher levels within the organization, it's a deal killer if you don't have it. That if you look at the distribution of charter holders within an organization, the heavier distribution is higher up. So I think that at some point you would be unpromotable without it. Now, I want you to ask yourself where the bigger time commitment would be. In your 20s or in your 30s? In your 20s as an entry-level worker or in your 30s as a mid-level manager, where you might be married, have kids at that point, be building a house, be building a family, be building a home. Where do you think the bigger time commitment is going to come? Where do you think it's going to be tougher to get that out of the way? So if we know that down the road in this profession, it's almost table stakes, why not knock it out now? Right? Why not say, look, I got time now. Let me at least get level 1 out of the way. Maybe I won't go for 2 and 3, but every level I can knock out of the way in my 20s means it's that much less work in my 30s, right? And I've already got that base to work on. So maybe getting on base now is good enough. Maybe you don't have to get the full home run, but maybe getting on base now is good enough. You never lose that base. 5 years later, you come back, you still have level 1 behind you. It doesn't expire. So it could be that the higher you go, the more necessary it becomes. But for entry level, maybe it might not make a difference. If you feel that suggesting it works against you, just don't say anything. Designations are also booming in Ontario. Do you think CFA will hold value against competing overlapping designations, CAIA, FRM? FRM is risk management, is not asset management nor asset analysis. It is risk management, which I think is an important thing to have. But you get a lot of risk management for your portfolio, for the for what you're doing in the CFA program. Anyways, that's what derivatives are for, is to shift risk. It's more for a banking job. It's more if you're going into that kind of field. For CAIA, again, it's alternative investments. If you are going into the internal alternative investments landscape, and you know that's the asset class you want to be in, well, there you go. You can start there, right? Yeah. But I don't see the CAIA as a competitor with the CFA, unless, of course, it's in the alternative investment space. CFA doesn't have enough quant given stats, comp sci are up. Again, CFA is a generalist designation. The CAIA is a specialist designation. There are specialist certificates and specialist designations you can get for the stats and comp sci. If you're leaning more towards the data science thing, there are specialist designations that you can get for that. Thoughts, okay, market. Like many industries, there are troughs and peaks. I've seen this happen on my previous profession in healthcare, and new developments took place. Could this be a new cycle for CFA Value? That's the thing about looking forward, is all you can have are your best guess, your best educated guess. Those in the profession would have a different trajectory for it. Those that are passing the levels will have one view. Those that didn't pass level one might have a lesser view of it. Maybe that view is colored psychologically to give them comfort that they didn't, that it didn't work out for them. Oh, well, it's not going anywhere anyways. It gives us some comfort. Is it going to disappear? No, it's not going to disappear. It still is a standard. However, I think there would have to be a significant push, some PR, a significant push in, and maybe it is going on. Maybe I just don't see it. Maybe everything is a function of just a terrible job market, right? What do you, okay, the CFA charging $50 for PDF version of their books is overkill. But you have to print them. Oh, the PDF. Oh, hang on. Let me back that off. The PDF. Yeah, that. Okay, I can. Yeah, you'd be asking the wrong person here. I wouldn't do it, right? But that's just me. I probably, if I were ever hired by a company like Apple, I would be fired in their marketing department. I'd be fired by the afternoon, because I'd be thinking about how we deliver more value, not how we extract a greater price. For some organizations, it's how do we extract more money? How do we gain more wallet share? How do we gain more market share? I've never really thought about it that way. Prices do have to go up because costs go up. Your employees want more every year. Amazon wants more every year. Real Player wants more every year. Microsoft wants more every year. Gmail wants more. Everybody wants more money every year. So prices do have to go up. But I probably spend most of my time thinking about how much more value can I add as opposed to how much money can I extract. I see some companies doing that, and I experienced with Apple. The laptop I bought was 7 grand. I mean, 3 years ago, you're paying what, 3,500 for a laptop? It's seven. I paid 10 grand for this computer. I set it up and it came with no mouse or keyboard. Oh, you want a mouse and keyboard? Well, duh. I mean, what do you think? So I had to run to Best Buy and spend another $300 for that. I think it's Apple has been on a multi-year run of how do we extract more money out of this person? How do we raise our prices, and less so about delivering more value? Other than a faster computer, it's not any better. I mean, it hasn't enhanced my life. So it's just a cost. I wouldn't charge extra for PDFs. In fact, I wouldn't even have them as an option. It would just be part of the package. I would deliver such overwhelming value that you would have a hard time saying no. And I've always believed that. If you want to bring your costs down, your marketing costs down to zero, it's simple. Deliver overwhelming value such that everybody says, I can't believe I paid this much. And look what I got. I can't believe it. Deliver overwhelming value. And you'll be forgiven for a lot of things. You can make a few mistakes here and there. You'll be forgiven if the other side says, what does it matter? I massively underpaid. What do I care, right? So we can look at it as, when the price of what you pay equals the value for what you get, you're going to need a customer service department. When the price of what you pay exceeds the value of what you get, you're going to need a public relations department and a customer service department. But if the price that you pay is way less than the value that you get, that company doesn't need any customer service or market or PR department at all, because you become walking billboards for that company. I'd be fired from Apple in half a second. I'm sure I would have been fired from CFAI if I said $50. $50 is not going to change your life. It's not going to change anybody's. $50 is not going to change your revenue. Like, what are we talking about? Millimeters on the top of your revenue? Just give it out. Just give it away. The goodwill you'll get would be better. Just give it away. That's just me. European, I'll leave a question here before going to bed. Is there a possibility of scheduling any of the live sessions earlier, allowing us across the pond to join? Yeah, I am concerned about that. But as I've said, time is not scalable, which means if I do something for across the pond, I must do two. I must say, well, here's the session for these guys, and then a couple hours later, I'll repeat it. Here's the session for these guys. It's double the amount of time. They're recorded, which is a nice thing. What will allow me to go beyond this limitation is Discord. So in Discord, the one channel that we're setting up will have, it's a video channel. You will be able to post questions. And at any time of the day, I can go and post video answers to all of them. As opposed to YouTube, I must be live to get your comments. So it's not effective. With Reddit, I have to type in my answers. I don't like doing that. The more I've researched on Discord, when somebody first recommended Discord, I thought, nah, what is this? Is this another WhatsApp? I don't have time for this. So I started looking into it and watching some videos, doing some reading, doing some research. And slowly, as each day came about and I reflected on what I learned, I thought, wait a minute here. This is an extremely powerful platform. At first, I couldn't understand all of the, you're clicking on permissions and there's rows and rows of this thing. This doesn't make sense. What are these bots for? And it was so confusing, but then you start learning about it and everything falls into place. And now I can see this whole architecture. And it's like, but if we did it this way, I could do video answers any time of the day. I wouldn't have to rely on some YouTube feed while I was live. because it is live all the time. I like that idea. I like the idea of saying, well, I got 20 minutes. Let me just go in there. Okay, I can put a video answer to this. I can put a video answer to that. So we're working on setting it up. The setting it up is easy. It really, I mean, once you figure out what you want and all the channels you want and the permissions and the roles you want, that's the easy stuff. The hard part is the door. Who comes in, right? You can't just let everybody in. Who comes in? And if it's for subscribers only, you have to find a way to match the email that you have on the site with the username of the person on Discord. You have to find a way to match it and to do it automatically, because you're talking about tens of thousands of people. So you're not just going to sit there and check each one yourself. You have to find a way to do it. Then you have to find a way to determine what their credentials are, because there are some conversations that we're going to have that rely on increasing credentials. To have permission to engage in the conversation. While everyone can see the conversation, not everyone can engage. What we don't want is a YouTube style comment where you have all of these usernames, you don't know who they are. So you weight every comment equally. So somebody says, this sucks. Well, what weighting would you put on that comment? This is the problem I have with places like Reddit and the YouTube comment channel and most public forums is, how do you weight the comment based on gravitas? So let me give you an example. I say yields on this are rising, and some 15-year-old says, that's the dumbest thing I've ever heard. Yields are not going to go up. And a 20-year bond trader comes in and says, well, I disagree. I think they're actually going to shrink a bit. Which one would you weight by more? If they're both behind screen names, you go, well, I don't know. One says yes, one says no. But one's a 15-year-old that doesn't know anything. One's a 15-year veteran that plays this game every day. I want to know that this is a 15-year veteran that plays the game every day. I want some way of weighting that comment, right? And I don't want to have to start thinking about all the tags and all the credentials they have. If I go into a certain channel, which is just you have a community, and then in that community you have different conversations going. If I go into a certain channel, I want to know that everyone in that channel has at least this qualification or higher. I want to hear that conversation. So let me put it to you like this. What would you pay for a streaming service? You'll never get this done, by the way, so I don't mind giving you this idea, because you'll never get this done, ever get this done. But what would you pay for a streaming service where every investment committee discussion, they go into the room, they have their investment committee meeting, from every major fund is streaming? Oh, here's Goldman Sachs morning meeting. Oh, here's Morgan Stanley's morning meeting. Oh, here's BlackRock's meeting, Blackstone. You can click on them and you could sit in on their morning call of what they're going to do that day. How much would you pay for a streaming service that had a camera in every one of those meeting rooms where you could listen in on the strategy for the day, where you can listen in on the conversation? 5,000, 10,000, 20,000 a month, i.e. 20,000 easy. I'd pay 20 grand a month to hear those conversations. But now let's say it's just a bunch of people off the street, and there's a streaming site of just a bunch of people off the street from anywhere having conversations. Would you pay 20,000 a month, 5,000 a month, $5 a month, right? That's the difference. That's what I want to set up on here, is escalating channels of qualification, where down here you can engage in conversations, but if you go to a level that you're not qualified for, into a room that you're not qualified for, you can read the conversation, but you can't contribute because you're not qualified to be there yet. You haven't earned the right to contribute in that conversation. Now I've weighted the comments by the qualification. I think that's a more interesting conversation. I don't know. What do you think? This is the problem with Reddit. If they were weighted by your qualifications. So I knew the difference between somebody saying Kaplan sucks and Kaplan sucks. Well, two people say Kaplan sucks. Yeah, but one person is doesn't have any qualification behind their name. The other person is a tenured professor at Columbia. Wow. Okay, well, the tenured professor at Columbia must have some opinion that I'm interested in hearing. But the other one with no qualification and no gravitas behind them, what do I care what they say? The I think advantage of the internet is that your opinion is democratized. Your opinion can rank up there with everybody else's opinion, but everyone's got an opinion. I, as a consumer of opinions, as I'm reading everybody's comment, I, as a consumer of opinions, can't tell who has the better brand. I want to know who has the better brand. I can't stop that on YouTube, but I can stop it and I can control it on Discord. So once we get to Discord, yeah, they'll get back to your question. There'll be whatever time zone you're in. I should be able to, depending on where I'm floating around, be able to deal with that. I think the next step to education is a community that continues it on. Not some open community that everyone's in, but very channeled conversation in there. I'm excited for it. I really am. Just with the way we're setting this up, it's going to be great. No one's ever seen anything like this before. I'm hearing a lot of good stuff about it. Everyone said it can never be done. Pull a little bit of Trump on that one, eh? Rewriting L1 instead of going back to relearn the core materials in the text. Rewriting L1. Rewriting L2, sorry, instead of going back to relearn the core materials in the text. What are your thoughts about spending a lot of time in the Q bank, figuring out the weak spots and thus practice? Well, if all you're going to do are questions, I don't know that they help you improve. Because if you saw that question again, you'd say, oh, this was the answer. But if I wrote another question like that in a slightly different context and you didn't recognize that it's the same thing just in a different context, you'd probably still get it wrong. Doing question after question after question, I think you shouldn't be surprised if you keep scoring 65 or 70 on every exam and not improving. Why? Because there are no interventions. If you're doing it to figure out where you're weak, do you have to? Do you have to answer a bunch of questions to figure out where you're weak? When I was a student studying for final exams, I kind of knew where I was weak. I kind of knew what I knew, and I knew where I was weak. I didn't have to do a whole bunch of questions to say, oh, look at that. I'm weak over here. I kind of knew what my weak points were. I think the same for you. You probably kind of know which topics, I don't quite get that. You probably already know where you're weak. I don't know that you need questions that you get wrong to reinforce what you probably already believed. I'm sure after you do some quizzes, you're not surprised by the results. You don't suddenly say, look at that. I aced quant and I hardly know anything about it, but my God, I messed up really bad here. I don't think that any of your results are probably surprising to you. I think they're probably, well, yeah, I expected this. So I think it's maybe some wasted time in trying to figure out what you probably already know yourself. CFA content is solid, true. Covers quality finance content. Master Finance programs mimic their programs around it, which is true. Yeah, there are quite a few schools that use it as a basis. Do you think that is driving students away? The comfort of the same education via school? No, I don't think so. Because if you see it in school and you're told, well, this is the CFA content, you would think, well, I'm writing this. This will be easy. I should be able to get these letters without a problem. I think it would motivate me, not hold me back. Again, just my opinion of the way I see the world. Some other people may say, no, it would hold me back. Why would I do something twice? Keep in mind, designations and letters behind your name do not, they are in no way um, a substitute for learning. It's not as if, oh, if I could just get those 3 letters behind my name, I'll know it. No, it's the knowing it that gets you those 3 letters. Those 3 letters you don't need if you know it. You don't need. But it's a signaling device to the market that you do know it, that somebody has certified that you know something to a certain level of proficiency. It's a signaling mechanism to the marketplace. That's what you need it for, is that signaling mechanism. It's hard to signal that you, oh, I know, I understand equity valuation. I have no formal training, because my first thought is, well, there are things you know and there are things you don't know. You're probably unaware of the things you don't know. And I'm only going to become aware of it when you make the mistake that costs me money. Whereas if you've gone through the CFA program, I can say, well, at least I know you're aware of these things, right? At least I know that that's what you, that you know that exists. Whether you can remember it in the moment, at least I know you know it exists. Whereas if you have no degree, no signaling device, it's not what you know, it's what you don't know. And more importantly, what you don't know that you don't know, because then you don't know to fix it. The more education you have, the more it will highlight to you all the things you do not know. So it brings a little bit of humility in the way you look at the world after you achieve a certain level of education. You say, wow, there's so much I don't know. But at least you recognize you don't know it, as opposed to falling into the trap of a little knowledge. Little knowledge is a dangerous thing, because if I know a little bit about something, I may convince myself that I know it all, and there's nothing left for me to learn. That's the danger of somebody saying, I'm self-taught. Well, to what standard, though? What standard are you self-taught to? Yours? Well, what standard is that? Where do we leave off here? If, in theory, if a quant finance designation was made, is there not? Data science? Do you think it would outcompete the CFA? No. A designation based on fundamentals of finance like CFA, but with additional quant and calculus? No, I don't think so. If anything, if there was one, it would be a specialist designation, not a generalist plus a specialist. Institute has large cash reserves. Why not invest more in editorial oversight? I agree. And author training. I agree. Or lower the price. In CFA's defense, does the rate of 40% reflect more on candidate quality rather than program rigor? So they do break down numbers in terms of, if you registered for an exam, did you actually write it? Now, there was some question of, yeah, but that doesn't account people writing for the second or third time. Yes, it does. What it is there's one pass rate. Did you register for an exam, and did you write the exam you registered for? Versus, did you register for an exam and then defer that exam? Whether it was your first time, second time, third time writing for that exam, it was the first time sitting for that exam window that you registered for, right? So you didn't defer. It could be your third time taking level 1. You registered for November and you sat for the exam you registered. You're not considered deferred. If you take the deferred out, the pass rates are much higher. So they are much higher. But when you add the deferreds in, they are lower. Now, I've seen this in university, where you get a student who says, oh, I'm you get an email an hour before the exam. I'm really sick. I can barely get out of bed. Yet somehow here you are writing a long email to me on your iPhone. But okay, I get it. You got that 3-hour bug. And I used to answer back, oh, it's okay. By 4:00, you'll be fine. That's when the exam was over. You'll be fine. I can't make it. It was never an A student. It was never an A student who was sick. or a B. It was always a C or D student. And then you have to write a makeup for them. It's like, oh, they create so much work because they think they're going to get the same exam. They're not. There's always a makeup exam that's different. And they never score any better. It never raises their score. They never say, I bought an extra week, I'm going to really study now. They just bought an extra week to do it, to live their lives, to wake up the night before, or to arrive the night before the exam, say, shit, I got to study for the exam tomorrow. I can't delay it. I already did. They're not going to change their behavior. So this is what I saw in university. Those who were sick for the exam often were the C and D students, and they never did better. And this could be the case with the CFA program, is those who defer probably get to the point where go, I'm not going to pass. I'm never going to make it. And path of least resistance is, I'll just defer. It's the path of least resistance. If you open the door, as like I said earlier, if you open the door for me to lower the amount of effort I do, if I have it in me, if that's the type of person I am, I will lower my effort. If you open the door to defer, rather than double down, rather than sacrifice things, rather than lean into it, they will take the path of least resistance. I would suggest that they probably shouldn't have registered for the first exam to begin with. But there is no entrance exam to be able to write the CFA exam. Anybody who wants to sign up for level 1 can. Some people should not be signing up to level 1. So if you look at those who do not defer, do not take the path of least resistance, you get, I think, a truer pass rate. The ones who do take the path of least resistance, I think, may have scored better if they just leaned into it, but they deferred, fell into the illusion of time that, oh, I got lots of time, and still within a month away from that exam said, oh, I'm not prepared for this exam. Didn't use the time appropriately. Now I'm making general statements based on what I've seen in university, but I think you can make general statements about this kind of stuff, and that they're true. All right, let's keep going here. We're about halfway through these comments. Given changes to the CFA curriculum, I'm wondering if there is a more efficient way to gain the technical knowledge which would complement the applied series. Just jump right into the applied series. Just jump right in. The applied series has a lot for you as a retail investor. A combination of the applied series with the CFA makes it much richer, and the combination of the applied with the CFA becomes that much more valuable in an interview room, where you can suddenly talk about a whole bunch of topics in a practical way as opposed to some abstract way. Level 1 CFA, you learn nothing about industry sectors other than that they exist. You learn nothing about particular sub-industries. But I think it's, if you're going to sit in a job interview and be able to carry on a conversation the way an experienced person would carry on a conversation that has had exposure to all of these sectors, I think matters a lot. So it's a great complement to the CFA, but you don't need the CFA to get started in it. The hope would be that it becomes addicting. The knowledge, gaining that knowledge becomes addicting, that you'd want to know more foundational academic knowledge to back that up. Level 1 candidate, how would you suggest approach the applied? Oh, I already did that. Level 2, May 25 candidate, finding a bit challenging to implement active recall and spaced repetition. With alternative investments and ethics left, may I request you to provide an example of study strategy for the next 4 months? Active recall and speed repetition. Well, level 2 is a evaluation level, heavy valuation level. So you're going to see arithmetic formulas everywhere. I'm not going to call them math because it's not math, it's arithmetic. You're going to see arithmetic formulas everywhere. You don't memorize your way through that stuff. You pretty much have to work with that stuff. So I don't know that I would rely on recall as much as muscle memory, in that if you work enough problems with this arithmetic, you'll get it. That's the way I would think about it. The other thing is, this is not your first exam. You had level 1. It's not your first dance. You also have a significant amount of a university career behind you, where you've written midterms and final exams. You must have been successful in those. So I don't know that I would say, here's the thing you got to do. Here's the secret sauce. There is no secret sauce on anything. There is no secret to learning. It's been the same as it's been for 5,000 years. It's called putting in the time. There is no secret. There is no shortcut. Any secrets and shortcuts have found their way into the education system long ago. You don't sit in a chair and put your head back and something clips into your head and downloads all this information. There's no shortcut. It's called putting in the time. Simple as that. And what time do you put in? Well, what made you successful in all your other exams? That's the time you put in. That may be different than what made me successful in all my previous exams, although there'd probably be a high correlation among the activities that we do. Mine would be tailored for me and the way my brain works. Yours would be tailored for you, but you've been successful in exams before. What did you do? Do that. That's what you should do, right? Exam on the 18th of February. Really excited. Thanks for such great lectures. Already reviewed everything thrice. Ooh, thrice. But suck at theory. Taking a mock today. Thoughts to review one more before mock. Oh, that's more of a comment. How helpful is applied series of people working in private wealth management? So I think the applied asset management probably wouldn't be that useful, because for the most part, you're going to have some model portfolio with model allocations, and you're going to have external fund managers that you send money to. This is who we use for large cap. This is who we use for small cap. This is who we use for fixed income. You have your stable of managers that you send money to. Maybe you set up the asset allocation, or maybe you set up the factor leanings. Whether it'll be to the value or the growth manager, whether it'll be a small cap or mid cap, maybe you're responsible for that. So you might engage in some kind of capital market expectations. There, I think the sector studies can help. You would learn a lot about the individual sectors and about the sub-industries within those sectors. Financial modeling probably wouldn't be of much help to you. Beyond the sector studies, I don't know. Applied options wouldn't be relevant for private wealth. Portfolio construction, it's meant more for more active styles, not just a bunch of funds. Yeah, I think the applied analysis might be, I'll put a weighting of it of like 50% useful. I certainly don't want to sell you on something that you're just not going to use. I don't think the applied asset management would be of much value, unless, of course, you wanted to get a lot more active. Unless, of course, as a private wealth manager, you actually ran portfolios with individual stock names in them, where you actually built them in-house and you had model portfolios in-house, as opposed to money managers outside. If you're just sending money to money managers outside, limited value on that side. But if you're managing it in-house, then yeah, quite a bit of value. Why don't you like leveraged ETFs? Leveraged ETFs are not compounded returns. They're daily returns, right? I shouldn't say they're not compounded returns. They're not. They don't have the same beginning and end point. So if you took a stock and you said up 7%, down 3, up 5, down 4, down 6, down 3, up 2, up 5, up 7, and you did the same with the leveraged ETF, but you doubled it, you won't end up in the same place. So huge tracking error, lots of tracking error. And they typically, over time, because of the randomness of the way the stock moves, they typically walk themselves to zero over time. Slowly, but they walk themselves to zero. So the tracking error over time between leveraged ETFs and the stock widens. But in defense of the levered ETFs, they do not claim to minimize tracking error. They claim to minimize daily tracking error. In other words, they will return 2 times the daily performance, but not 2 times the weekly performance. The daily performances won't add up to the weekly performances because of the randomness associated with doubling, and if you're down a certain percentage, it won't track the stock. You can convince yourself of that. Just take a stock at $100 and a double levered ETF at $100 and say, okay, the stock will be down 2%, up 2%, up 3%, make up 6 or 7 numbers, and then double them for the ETF. And you'll see that the ETF won't end up in the same place. It'll end up with a lower compounded value over time than it says it will. It'll still be more than the stock because it's a 2x levered, but it won't be 2x. And that tracking error will widen over time. Will closed captions be added to the program for those with hearing language issues? Now, I don't know about that. This is not my my area of expertise. I wouldn't know if they would be or would not be. I imagine over time there'll be some sort of functionality we can add that will do that without the words writing over the screen. I imagine there'll be something we could do there. As you've said in recent videos on CFA enrollment numbers, experience trumps certifications, hands down. Do you think completing the CFA designation without a relevant work experience is counterproductive? I don't see it as counterproductive. I think what would be counterproductive is turning down a job because you want to finish the CFA. That would be dumb, right? I think not finishing level 2 because you're getting a job and it's going to require a lot of time is the smart move. Let it go. You can always come back to it. But I had some people say, I just got to finish level 3. I got a job offer. Should I just wait until I finish level? No, no. The job, the job trumps everything. The experience trumps everything. You take that, hands down. I'm in the market for a new chair. How comfortable finding your current chair? This is a great chair if you need to write on your desk, right? Or you need to get very, very close to your desk because the arms here, each of them move independently. So there are some desks, some chairs you buy where you come up to your desk and the arms just hit the chair and you can only get so close. You're always leaning hunched over like this. I want to be sitting straight up so I can pull straight up to the desk. What I don't like about it is when I'm sitting here, if I got to push it back hard and then I got to hold it if I want to lean back. I got to hold it back because if I let go, it snaps me back up. Not a big fan of that. So I have another chair over here that when I lean back, it leans back. I could just sit there and hang out backwards like that and stare at the ceiling, but I don't like this chair for that. Other than that, I can sit in this chair for several hours. I don't have a problem with it. Thoughts on Colombia's tariffs? They changed their mind very quickly, right? The last headline I read is Colombia agreed not only to take the migrants that were being shipped out, but Colombia is actually going to send a plane to go get them to bring them back. So now they're going to help with the transportation costs because 25% tariffs, right? That's they don't want that. So I guess some people got around and said, well, they do belong. Those people do belong to us anyways. They are Colombians. I mean, okay, fine. Right. So now they're going to take them back. But I'm sure when that plane lands, who's ever on that plane is going to be in for some punishment. And you think CFA Institute realizes what's wrong with the program? Yeah, I think they realize well, I think they're aware of some shortcomings, but I think like any company that has a product, they tend to be overly proud of the product that they have. It's hard to um, take in um, criticism about your product, especially when you work hard on it. And I have no doubt that there's a team of people working very hard on this. So it's hard to take in the criticism. You end up being a little bit more proud of your product than you should, perhaps. But when I say I have feedback for them, they set up meetings. They're interested. They listen to me. And I tell them what I found, and they listen. I don't know if anything comes of it. I never get any feedback from it. I don't follow up with it either. Maybe that's my fault. But I can get a meeting. If I say, look, I got some criticism about this particular thing, I can get a meeting. I just don't know if anything happens from it, but I can get a meeting. They listen. I could be completely wrong, but I think the elephant in the room that everyone is trying to mask is really a future with powerful AI that is driving down the fundamentals of the finance analyst job. Okay, so on this one, excellent talk on Marcus Academy. Let me flip over to that with Edward Talamas on introducing AI agents, and he presents a model where he shows, and he has in the model, he has individuals with a certain level of ability across the spectrum, some distribution. And then after above some certain amount, there are supervisors above those people. And then he runs a model that substitutes AI agents for either the employees or for either subordinates or equal people. So co-pilots versus co-workers. And the model is meant to demonstrate the effect it would have on the wage. The wage is what you would either pay the employee or what you would pay the AI. What it would cost you to run the AI, to run the co-pilot or the co-worker. And the model that he runs shows that it is more the lower skilled and lower waged employees that would be affected most. And so it was sort of a payoff where if everybody was paid according to their output, you'd have a 45-degree line. Based on your ability, you'd have a 45-degree line, a linear line. But he finds that it's a tangent line like this. And with AI, this part of the curve drops for the lower end, but the convex part skyrockets even more. In other words, for high performers, it's going to make you an even higher performer. For low performers, it's going to displace you. So will AI completely revolutionize the finance industry? I don't think so. I think AI will replace dead wood, and there's dead wood everywhere out there. Some like Goldman Sachs has a policy of every year the bottom 10% have to go. The bottom 10% have to go. Well, why bring in a whole bunch of people just to scoop out the bottom 10% every year? Why not just put AI agents in place and be done with it? It's interesting, I think, if you consider how hierarchies are formed, right? And this is where you start thinking, well, how do you fit in an AI agent? If you think about how they're formed, we start in organizations at the bottom and we work our way up. But that's not how hierarchies are formed. They're formed from the top down. So I start a business, I'm doing things, but over the time of doing business, there's going to be a lot of routine stuff that creeps into my day. I don't want to do this routine stuff. So after the routine stuff gets to be so much of my day, then that's where you would then hire somebody to take care of the routine, and it elevates you to do more of the higher level stuff. And then that person over time that job is interesting and exciting, but over time there'll be some other routine stuff that they can pass on down, and that's how, when you first start at the lower levels, you're doing the most routine stuff, and you work your way up because all the routine stuff got pushed down. The thinking is, well, now that once I get a whole bunch of routine stuff, maybe I don't need to push it down and create a hierarchy. Maybe I just need an AI coworker, an AI agent that I start giving these routine things to. Right? And if I'm giving them the routine things, they're not actually making the big decisions. They're just handling a bunch of routine tasks for me. You'll really enjoy that talk. I think it was fantastic. I'll give it to you again. The channel is Marcus Academy, Markus apostrophe Academy. The talk is on introducing AI agents. I really liked it. It was so interesting. Normally I drift off in these, sometimes in the middle of these model presentations, I tend to drift off because it's a model, but this one was really interesting. So that may help you with the idea of where would these knowledge jobs go with AI agents, right? No, not touching that. No, that's market related. You getting your new desk? Will we get to see the new artwork? Let me see if I can twist this one and show you what I got here. You tell me if you can see that. There's the new artwork, right? Without losing any connections either. Isn't that incredible? And the new desk, I went to pick it up the desktop this week and not ready. It's still not ready. So I said, I'm heading back to Costa Rica on February 23rd. Am I going to be able to pick it up before then? Maybe. Carpenters. But let's see where I leave off here. Would it be possible to still have access to Canadian Securities Course video list? That's not mine anymore. I sold it to Moody's. I did another version for them, sold it to Moody's, and I have no control over it. I have no property rights on it whatsoever. I can't touch it. So no, I have got nothing for you. Glad DeFi will take over. Well, one opinion. Any regulated finance will crack and crumble. Okay, well, I don't agree with that. But is level 2 really that much more difficult than level 1? I'm on level 1, but I've taken a look at level 2 books and it just seems like an extension of level 1. Level 2 is more challenging in a number of sections, yes. And it's a valuation level. So it is a little more challenging in a number of sections. I would say level 1 is just big. Level 2 is the hard level. Level 3 is, I always used to call it the boring level, but they gotten rid of the behavioral finance stuff, so it made it less boring. That stuff was just bloody boring. Level 3 is a portfolio management level, but with different pathways now. So, but level 2, I've always thought when I went through it, as I was teaching and going, well, this, if anyone's going to have trouble, it will be at level 2, not at level 3 or level 1, but level 2, I think. What is the more okay, I'm thinking of doing wealth management path. I'm consultant, but interested in wealth management. Okay. Going to sit for L2. Do you have any new tips on approaching L2 in the modern era? Well, I don't know that when you say modern era, I don't know what you mean by that. Learning, again, has been the same as it's been for 5,000 years. What would be different? I see. This is the problem with YouTube right now. What I'm just doing right here, right now, is I'm on your comment and I'm asking you clarifying questions, but I would have to scroll all the way down at the bottom to see them. on Discord, I can hand you the mic and you can clarify right there live for me exactly. We can have a little conversation back and forth in the moment to figure out what your question means so that I can answer. Because right now I only have more questions, right? So yeah, I'm very, very eager to get that up. So I'm not sure what you mean by the modern era, so I don't know how to answer that. Will you do more content of explaining and applying concepts in finance? It's all I do. It's all I do. Do you feel there are too many MBA programs these days? I felt there were too many MBA programs 30 years ago. Seems that MBA is getting diluted. Yeah, I felt there were too many 30 years ago. Never mind today. If you were an activist investor with a percentage in CFAI shareholders, what will you change about the current situation? The editing. Number one, the editing. It's a hit to my credibility. It's a hit to the credibility when you have that many mistakes and sometimes fundamentally wrong things. It is a hit to the credibility. You're the pinnacle designation, and you're saying this stuff and this stuff. And this is not how this works. Not one bit. That's not how you do this. And the end of chapter questions are just a shit show sometimes. It's a hit to your credibility. So yeah, I would be saying this has to change. Number one. Number two, let's concern ourselves a hell of a lot more with value than with price. Price will follow. Let's concern ourselves with value. Now, they may think they're delivering a whole lot of value. I guess if I were on the inside, I'd probably be thinking the same thing. But from the outside, you see just a lot of price, right? And then find some process of editing that I can leverage the knowledge base of people I already have. What I said earlier is, why not give the prep providers an extra 3 months and lower the price on the condition that they must report errors, or give them credits against errors that they report. For every error you report, you'll get this much of a financial credit against next year's prep provider fees. Okay. So now I'm being motivated somehow, but give me something. I would understand incentives. It seems there's a lack of the understanding of incentives there. If you're interested in working on the buy side, do you still recommend we go through the sell side first on the applied series? Yes, I do. For the financial modeling, yes, I do. Because you must first learn how to construct a model. If you're buy side oriented, a 5-year forecast is fantasy. It's pure fantasy. You're more concerned probably with the last 2 years, and you're probably concerned with them on a quarterly basis. You're not really concerned about the last 5, but the last 2 mostly. You're probably really only thinking about the next 12 to 24 months, really. And you're not interested in every line item on the balance sheet and income statement, because there's a lot of those items that are a result of doing business, not a driver of doing business. So you're only concerned about certain things, and you only care until you get to a point where you can either say, nope, there's no point in going any further. If you're rejecting it on the 2 or 3 big drivers that you're looking at, it's gone. If you like it for the 2 or 3 big drivers, you may do a little bit more, but you get to a point where you go, I'm good. The rest of the line items are meaningless to me. Sell side, you're doing every line. 5-year forecast, valuation, fantasy, because it's all based on your assumptions, and most assumptions just have sales and expenses going up forever. Fantasy, pure fantasy. Let me say it again, pure fantasy. When you're going out 5 years and you're forecasting, I guarantee you it's not going to look like that in 5 years. Your next 12 months may be pretty close. But 5 years out, no. However, the building of the model is important to know. How much time do you recommend of study time? Whatever it takes for you. I don't know anything about you. Some things that might take me an hour might take you 3. Some things that might take you 15 minutes might take me an hour and a half. I don't know. We all see the world differently, and sometimes I get a blind spot where other people sail right through. I can't answer how much time. It's whatever it takes for you. I remember being asked, why did I take CFA exams in an interview? Well, answer honestly, why did you take it? Right? There's nothing wrong with saying, well, I thought it would make me more valuable. I figure I'd make more money throughout my career. I'd be more promotable. I would stand out against other candidates. Those are all true statements. Those are all, don't be afraid to say anything about money in an interview. Why did you take it? Well, I thought that it would raise my value in the marketplace. I could make more money. It's an investment in an asset that appreciates over time. Isn't that what you guys are all about? Investing in appreciating assets? That's what education is. That's what I did. I invested in an appreciating asset. What are you telling me it's not worth anything right now? Get in their face with that too. Yeah, you're not going to get that job. But just be honest with them. Everyone goes into these interviews thinking that there's some pre-canned answer that they have to give. Let me tell you right off the top, if you know what you're talking about, you'll speak with confidence. Be authentic. Don't try to figure out, well, what do they want to hear? Say what you believe. There's nothing wrong with that. There's nothing wrong with saying, I want to earn more money. I want to be promotable. I want to sit where you're sitting in 5 years. I want to be the CEO in 20 years. There's nothing wrong with saying that. Say that's what you want. Right? I did the CFA, yeah. Friends of mine didn't. And believe me, I lost a lot of weekends and missed a lot of parties doing it. But you got to have priorities, right? You got to know when to sacrifice. That's music to their ears. Priorities, sacrifice, putting in the time, making more money. You're hungry. That's what this industry is all about, hunger. And you got it. And you're not afraid to say it. Excellent. I believe you. Right? You're not just trying to ingratiate yourself by saying wonderful things you think I want to hear. Just let that go and be authentic. Where are we here? Do you think Trump's threats against other countries could lead? Oh, okay, that's not CFA related. Will we have access to all past and future content of Applied Level Series 1 subscribed? Yes. If you subscribe, all the content that is there, you have access to. And all the content that I add, you will have access to. Yeah. And in about, I don't want to be aggressive with this. I'm going to say by the time I get back from Costa Rica, let's say end of March, because I'm only going for about 3-4 weeks. I'm doing some live applied level events down there. And I got to do some upgrades to the house. I'm hoping that by the time I get back, we're ready to go with the Discord server. So part of the applied level is access to the Discord server where it's the conversation, I think, is going to be a lot better than the comment section we have, and a lot better than once a week on YouTube. It'll be perpetual. So I'm really looking forward to that. Less people are enrolling in CFA and even post-secondary in general. Does this mean MPS for 2025 will be lower, resulting in higher pass rates? I don't know that I would expect to see higher pass rates. So MPS may be lowered, but not to the point of engineering higher pass rates. I don't think that's what's going to happen. Do you ever attend CFA conventions? No, I barely leave my house. But that will end this year. I am thinking of with Serify doing some live level 3 events, live in different cities. Just got to work out the details of it and see if it's worth it for anybody on any side. Maybe people don't want it. I don't know. I'm afraid finance isn't what it used to be. Finance has been an evolving field, right? In the mid 90s, very rare to have the level of retail participation that you have now. In mid 2000s, also you had a lot more avenues for getting online, but still it wasn't as big as it is today. Now with all the different platforms you can use, with things like Robinhood coming in, uh, uh, you have probably more participants here than ever before. Do some of them treat it like a casino? Yeah, but that's always been the case. It's always been the case that some people treat it like a casino. It's just one big casino for some people. And that's what can become very addicting to some people. And they lose money after losing money after losing money. And they put more in and they put more in. They make some and they give it back. They make it and they give it back because they never rise above the gambling. They never step back from the screen. The worst thing you could do is stare at the screen. Worst thing you could do. I don't know that finance has changed as much as the demographic that has access to the markets has changed. Now, you could argue from a transitive property that if the population that has access has changed, it would change the flavor of the markets. Opportunity is still opportunity. I don't really know that it has changed much when I think back of when I first started. If anything, I have more access to information now than I used to. For a couple of reasons. Reason number one is there just is more information to access, and reason number two is I have connections that I never used to have before. If I need access to something, or I need a report from something, or I need to know what somebody else is thinking, I have connections for that now. I've become a hub of information, which I kind of like. I have conversations every week with people, and these are great conversations. Do you know how long a conversation can last between you and someone else who absolutely loves this game? 8 hours. It can go on and on and on and on and on and on because the conversation just flows. It just flows. It just flows. Because then I think, well, what do you think of this? This is my thought on this. What do you think of this? And then I'll ask, a couple of days later with somebody, well, what do you think of this? And I'll always get a little perspective that I never had before. So for me, the game has gotten a lot more interesting. Again, in part because the longer you play this, it is a network. It is a network like anything else. If you're sitting alone in your room trading markets with no access to information, you're almost gambling. But if you have access to information and you are actually digesting that information and using that information to inform what you're doing, then it starts to get exciting. But don't forget about the community. Don't forget to make contacts in different places, because that's going to matter. Because if you have an idea and you talk to 10 people, those 10 people may not know as much as you, but they're going to know a little sliver of something else that you don't have, right? That's absolutely powerful. My connections, thankfully, with CFA program, my connections have really elevated. So I protect that, rigorously, because it is something I cannot buy. So build a network. But finance is what it used to be. How Python and machine learning will help in CFA? That I can't answer because I don't use Python or machine learning. Is it necessary to learn these skills? I'm hearing it is. I'm hearing that it is a definite advantage to know it. But, depends on who you talk to, I imagine. Can you please speak to networking and finance? How has the networking benefited your career? Oh, I just did. How do you recommend we join CFA Society as a candidate? Yes, you do. If there's a CFA Society in your area, join it. It's who you know. And the conversations that you can have about things. You're not fishing for inside information. Of the people I talk to, I'm very careful not to infringe on any friendship I have by saying, come on, just tell me. I'm very careful to do that, because you'll wear out that friendship very quickly, right? Do not ask for that shit, because you won't be welcome anywhere. But just to say, I'm looking at AT&T. Here's my thought on why I think it's going to be a $50 stock in 4 or 5 years. Where am I wrong? Right? And just hearing what other people have to say. If you're going to be sending more bits and bytes around, if you're going to move from 4K to 5K, you need a network. The network is everything. You need a network, right? So the network is only going to become more and more valuable over time. Well, what do you say? Okay, well, that's interesting. What do you think? And somebody may say, well, I know somebody who has a fund who just bought some, and this was their reason. Or I know somebody who their fund just sold a whole bunch, and this was their reason. Okay, that's not inside information. It's just part of the conversation, But if I were talking to the AT&T CFO and I said, okay, look, what are the numbers? Come on. I introduced you to your wife. Come on. No. That's bullshit, right? Don't ask friends to do anything that you wouldn't want them asking you to do. Most important is not level 1, 2, 3. The only thing that matters is the difference. It makes a difference is network. Makes a big difference networking. But again, let me put it to you like this. Who would you rather know? The graduating class of Tri-County Community College or the graduating class of Harvard? Probably the graduating class of Harvard. Well, you're not going to know them unless you go there. You're not going to know them unless you're in their club, unless you have the same group as them. So if you want to network with a certain group of people, you got to be in their club. If you are, again, the higher you go in financial organizations, the higher the concentration of charter holders. So if you want to network with all of these people that are at the top, you got to be in their club. You're not just going to show up, not putting in the work and be part of their network, right? Unless you're one of the rich people, you're not going to be invited to the party in the Hamptons. That's the way it works. It's just the way it works. You're not going to say, well, let's just go network in the Hamptons. Well, who are you? You haven't earned the right to network in the Hamptons. So sure, networking is big, but what network do you want to be in? Some networks have a cost of membership, that being a certain qualification or a certain credential or a certain membership in a society or a certain from some schools, from some graduating class. There's always the networks that are worth being in always have some cost in terms of what you've done in your life to be part of that network. Always. So yeah, you're right. The networking is important, but the membership in the club is just as important to start the network. 1, 2, 3, no networking. What have you done? 1, 2, 3 with networking, powerful, absolutely. But not being part of the club, it's doubtful you'll be in that network. Sector Studies Applied Series, trying to break into corporate finance. Do you think this is helpful? Corporate finance? The financial modeling, I think, will be helpful because you pretty much have to build models for project financing, which are pretty much along the same lines where you're going to have to forecast out cash flows. Much of it, no. Like as far as the applied asset management side, the options, portfolio construction, other than managing your own money or being a little bit better at it, probably not. Beyond financial modeling, probably not, because corporate finance is, if you are investing in anything, your marketable securities are typically money market securities. So there's not much of portfolio thinking that goes into that. What advice would you give to newly graduated students looking to land a job in the industry? What would you suggest we spend our time on? CFA networking or something else? Why are they independent? you're not just going to say, I'm going to network today, leave your house and go looking around saying, well, there's a network, there's a network, there's a network. Usually you enter networks by entering into societies, one of them being CFA. It is a community. So you enter into these networks by first having membership in some kind of group. So yeah, definitely network, but understand that networking, there are table stakes to depending on what network you want to be part of. Nice gaming chair there. You think it's a gaming chair? Why do these get called gaming chairs? I don't know why. Is it because this is the best kind of chair if you're going to sit in front of a computer for a long time? Why can't it just be called an investor's chair? Investors, you sit in front of a screen all the time. It's not a gaming chair. It's an investor chair. Come on, man. What company did you use to create website when you first started? That's all internally created. On average, how much did it cost you to set up and maintain the website? A lot. A lot. And it's done over time. I mean, you set up a site and then you think, okay, we need this, we need this, we need this, we need this, we need this. You got to hire more people. You're always, we need this. The list of things that need to be done just keep growing. Right. And then you need the app. Well, we got to hire people. Everything was internally developed. So it wasn't like I hired an outside company to get it done, built it internally. And if you're looking for numbers, millions, it's in the millions to build a site that scales to 30,000 users at a time. You're not getting that done with Joe's, website design down the road. You're not getting that done. You're building it on Amazon AWS. It's not cheap. But then again, if you're going to scale, you have to have that. You're not going to be on GoDaddy. You're not going to pay $5.95 for a basic website and on GoDaddy and get a WordPress site and expect that you're going to scale up. That's not going to happen. God, it's not going to happen. As soon as you get 3 users on your site on GoDaddy, you've hit your maximum. You got to build for scalability and success. It's a lot of money. It's a lot. Got the applied series. Thanks for the product that connects CFA knowledge to real life. Okay. Well, we're almost near the end of the list of questions here. Traditional paths into the VC and hedge fund. Is CFA useful for these fields? I believe they are, but VC, not without experience, not without some kind of either entrepreneurial experience where you've built a business and you've cashed out, or significant investor experience. But VC is not an entry-level job. Same with hedge funds. They're not entry-level. There may be entry-level positions, but not as a trader. And for there, it's probably a lot of who's in your network and who you know and who knows you. Big US bank, and we have internal informal get-together for those studying CFA to help each other out. Would you mind if I recommend your applied series internally? No, of course I don't mind that. Absolutely. Is the CFA the right path for those interested in impact investing, sustainable financing for emerging markets? Well, you're talking about very specific things, right? Again, the CFA is a very generalist designation meant to give you a very general understanding of a lot of stuff. And then from there, you determine what your specialties would be. But sure, is it going to talk specifically about impact investing in emerging markets? Not really, not specifically about that. But from the generalities, you should be able to apply it to the context of impact investing in emerging markets. You should have the tools in which you can then apply those concepts. So it's not going to apply it for you, get out the coloring book with a red crayon and say, here's how you do everything. It'll give you the tools, and then you go out and you apply it. CAA, a charter program. You heard of this? I have. How many practice problems do you recommend for CFA level 1? I don't have a number in mind. It is what is right for you. I mean, if you're answering questions and you're getting them right after right after right after right, enough. Like, enough. Do you need 10,000 questions? No, I don't think you need 10,000 questions. Will 500 do? Probably not. Right? But you do it till you get it. Whatever that happens to be. Level 1 seminar video for interest rate structures was removed. I don't have control over that. Given it's a key topic for L1, L2, L3, are you aware they will put the video back on? I don't know anything about that. There is, in fact, incentives for prep providers not to do it because students are coming their way. Oh, not to provide corrections. Well, that is the other thing, that if I think that I'm better at spotting the mistakes than another prep provider, why would I correct everything so that the other prep providers have all of my corrections for free? Why would I do that? Right? Why not become known as the one that has identified all the mistakes and let other people repeat mistakes? Some of the mistakes are such that unless you're a practitioner, you'd never pick up on it, because you'd have to know what you were doing. So if it's the first time that you're seeing something and it's wrong, you wouldn't recognize it to be wrong because you don't have the knowledge to know it. So you would teach it quite well the wrong way. So there is that thinking of, why would I share it? Why would I not just keep it to myself? Unless you incentivize me, why would I? The best incentive, I think, is when you publish all of the corrections, put the prep provider's name down that supplied the correction. And as you're going through the corrections and you see Meldrum, Kaplan, Meldrum, UWorld, Meldrum. Look at that. If you put my name down there, let me tell you something, I will give you the corrections, because that is marketing in itself. But right now, I don't get any credit. I don't get anything. I don't get a discount off the prep provider fees. I don't get early access to the material. I get no financial incentive. I get no marketing incentive. I get no PR incentive. I get no incentive other than, well, you'd be helping us out. Yeah, but you're not giving me a lot of time. But yeah, you do have a point. Why not just keep it to myself? And this way here, I have an advantage. Assuming that of course other people or other prep providers can't find the mistakes as well. Some are really, really obvious. Studying for level 1, what order would you suggest? It's also studying the applied series, and why? I don't know that there's an order in the applied series. I think I would align it the same way that CFA aligns it. You are introduced to analysis before you're introduced to asset management. I would align it the same way. Go through the sector studies and the financial modeling, and then move on to portfolio construction, applied options, and the positions. You're probably not going to understand a lot of my positions unless you've been through some other things first. And I would caution against copying what I do. I put my positions out and I explain my position so that you could see the thought process that goes into it. And you could see from week to week what decisions that I'm making. There are some positions where nothing changes, or it's been 6 months and really nothing has changed because nothing has changed. Some things are there for diversification purposes. Some things are there because they're still winning. But I would caution against repeating what I'm doing or trying to replicate what I'm doing. Past November, level 1, 2024, aim to be an informed retail investor. Would you recommend doing level 2 as well? I have bought the applied level when I signed up for level 1. Level 2 is focused on valuation. What would be helpful in level 2? Well, the whole equity section, I think, is absolutely useful. Corporate issuers is useful because it helps you understand why companies make the decisions they make sometimes, which is useful. I never found ethics very useful, especially from a retail investor perspective. It's just not something I think about. I don't call myself in to the compliance office and browbeat me and then make me sit in an ethics seminar for 6 hours. I don't do that to myself, so it seems useless. The economics is okay. Economics at level 1 is better, and at level 3 is good. At level 2, there's one reading, I think, which is good, but too abstract. The quant is okay. I don't know that I do a lot of multiple regression. Or I do some time series. Yeah, I do AR1s for the most part. I don't think I do any AR2s, but I have done AR1s. If you don't see yourself heading to an institutional role and you don't see yourself getting a job in the finance industry, even on the buy side, then you probably don't really need all the CFA. But if at some point you see yourself working for a fund on the buy side, at some point it becomes table stakes. The higher you go, it becomes important to have. Yeah. Chemical engineer, biotech. Ooh, cleared level 1, planning level 2. We'll clear level 2. Help biotech equity research analyst roles. As an equity research analyst, absolutely, because you have to do the valuation. So you better be good at the financial modeling, and you understand the industry, which is good. Now you have to understand equity valuation. So level 2 will give you that. Absolutely will give you that. But it will also give you fixed income, valuing embedded bonds and fixed income, valuing derivatives, a discussion of alternative investments. Like it'll give you a bunch of stuff that you probably would not need as an equity analyst, but the 3 letters are almost, especially as you move higher up and you become a team leader on whatever department, whatever sector you happen to be in, it becomes important later on. So that if you have the time now, knock it out of the way now, knowing that it's the 3 letters that'll be important later on, you're getting it under your belt now. I'm a doc and thinking of getting a CFA, zero background finance. Where should I start? Level 1? Level 1 is introductory. You don't need an undergrad. The level 1 starts at very basic knowledge of the industry. It's a lot of know what. That's what level 1 is. So you would start at level 1. What have we got? 2 hours? We're not bad here. Strange question, but are you in Italy? No. Your feed just popped up, and I swear I knew a guy with an apartment that looks exactly like this. Is not an apartment. How dare you, sir? This is not an apartment. This is a rather large house. This is just the front office room, but not an apartment. No, I'm not in Italy. DeepSeek is just a reskinned ChatGPT. This I don't know. What was interesting about the paper was the cost and the claim that it was done on these older model GPUs, and that it's open source, and that the other thing is it's not just a paper that you would rely on. It has been used, and it is being used, and other people have said, "Wow, let's test it ourselves. Let's take this down and run it through its paces." And you're hearing other places saying the same thing. Where did I see a bunch of statements about this? Oh yeah, actually, where is it? Have I got it up? Oh, it was before this video, and I don't want to take this video out now, but it was, I wonder if it's in my feed here. I was watching a 15-minute video on somebody who's in that space, who was talking about the testing of it and was highlighting all the other people in the industry who had posted to X about what they had found and what they were looking at. So it is something. It's not just a thing to be ignored. It might be a reskinned ChatGPT, but at a much lower cost. Job market is bad, but CFA helps enormously. That's good to hear. Private markets are exploding. This is true. engineer studying level 1. I do not think CFA knowledge can be used to predict the behavior of complex systems. Well, no, I agree with you there, but that's not the point, right? But seems it does offer some useful insights regarding the market behavior. No, it's not gonna help you forecast complex systems. But without the knowledge, without any finance knowledge, what would you know what to forecast? What would you know is important? What would you know? Part of a forecast is your assumptions, right? It's difficult to forecast linearly. It's difficult to forecast without considering unintended consequences and what the trade-offs are. But what it can do is you have some assumptions that you make, thinking that if these things happen, this variable would probably move to here. So over time, as you get information, you'll find whether or not the information backs up your assumptions or threatens your assumptions. Then you would hopefully change your forecast. That's called Bayesian updating. So it helps you determine, okay, I'm going to forecast something. What do I need? What are the variables that would affect this? Right? It can't be everything. Usually you'll distill it down to 2, 3 big key drivers. That's what finance background will help you determine is if I'm forecasting this, well, what would be the inputs that would make this go from here to here? Right? What are the drivers of performance of that? I finished quant FSA alternative investments and half of fixed income. Feel like I remember like 60% of what I've covered. Am I going too slow? Level 1 in May and you've covered 60%? No, you're on track. You're good. 95% of the market cap, active investing, passive is still incredibly small. Are you sure about those numbers? I don't know. 95% of the market cap is active investing. With all of the ETFs out there? Depends on what market, I guess, maybe you're looking at. Doing level 1 straight out of uni. Yeah. Level 1 is just a bunch of know what. Get it out of the way while you're young enough and you have the time. I agree. Yeah. Okay, I'm going to scroll to the bottom and work my way up here so I can get to some of the latest comments. Severance on Apple TV. I have, and I finished the second episode of season 2. Christopher Nolan bears a striking resemblance to you. Christopher Nolan. I'm gonna have to look up that name. Who's Christopher Nolan? For the website, couldn't you use another channel and embed unlisted YouTube videos? I mean, you could. Sure, you could. But the conversation on the site, just because of the way the comments are set up, they're set up more as a many to one. Many people asking me a question, but they're not interacting with each other. So it's me answering the questions. I need something that is more open and more dynamic and more fluid, and that would be Discord, right? It's how about recording the conversation you have in form of ooh, no. I would lose all those conversations. No. No. Sorry. That's you've got to earn your own network and your own conversations. I cannot do that. I would not do that. Is there any particular way one should approach studying the applied level? No, it wasn't meant to be progressive. I think if you start in sector studies and branch out from there, I think that's a good place to be. Do you encourage your CFA students to get into trading options? I don't know if I used the word encourage them to get into trading options. I don't know that I would discourage them by saying, "Oh, stay away, they're risky." I would encourage them to include them in as part of a strategy that they're using, because they are quite powerful for risk management. That is the purpose of them. First and foremost, is you can do a lot of risk management with options, and you can take positions in stocks, in currencies outside of your country, without any withholding on the dividend or any currency risk. And your gains become a capital gain, and your dividends are not taxed as dividend. They get smuggled in as a capital gain. It's powerful what you can get done when you know options. So I wouldn't encourage them to be option traders, but I would encourage them not to ignore options. How does that sound? I'm a trader who uses your applied series and YouTube channel. I'm not looking to run a hedge fund or work for any bank other than more knowledge. What would benefits of being a CFA? Well, the CFA, well, let me answer that two ways. What would be the benefits of the knowledge within CFA? Limited beyond the asset classes at level 1 and level 2. You don't need ethics. You don't need GIPS. You don't need. I think you could probably skip the portfolio management stuff because it's all theoretical. Outside of the asset classes at level 1 and level 2, very little. Level 3, maybe a couple of sections might be helpful, but if you don't plan on getting a job, you don't need the 3 letters. You don't need to spend the money to come up with something to signal to the marketplace that you know something, if it's never going to be on a business card in which you need the credential, where you need the respect of those letters. If you don't need that, then what would be the point? I agree with that. Any recommendations for a college student breaking into finance without internships from a target school? Network. There's actually, if you Google this one, I don't know if it would be available for you now. It's a paper called "The Strength of Weak Ties." The Strength of Weak Ties, and it talks about the value of having a large network with a bunch of people that you are familiar with, but that are not your friends. That it provides you more opportunities than your friend circle would provide you. So I forget who wrote, I think the author's name starts with a G, something Berg. I forget the author's name. The Strength of Weak Ties. It's a pretty good paper. I had the chance to meet CFAI CEO plus 2 LT members last year. They didn't seem particularly focused on the CFA exam curriculum, but the wider role of CFAI as an industry leader. Well, that should be the CEO's role, right? As far as the exam and the curriculum, there's a division within CAI that runs that stuff. They curate the curriculum, they set up the exams, they run the exams. The CEO really I don't think should be involved in the details of exam centers and exam questions and the content and all that, but should be more strategic at the top and saying, well, how do we place CFAI in the minds of leaders across the world? How do we make it the preeminent designation? How do we make it the cost of entry? And that's what the CEO should be, because that creates a pull strategy, right? You can go to the schools and you can push students into the CFA program, or you can pull them through the program by letting employers know the value of hiring these people, so that employers then begin demanding it, pulling it through the system. That is the CFA, the CEO's role, not setting up exams and exam schedules. That's lower level stuff, right? So I think that's right. I'm curious as to why you haven't just taken the exams to get the designation. Why would I? I have a terminal degree. It would be repetitive and redundant, and I don't need it. Who would I signal to? Another thing you should know about me, and maybe this will change your opinion about me altogether. I don't have a high school diploma. I never graduated high school. I was one credit short because I didn't need it. I didn't need it. Should I go back and finish high school? Should I get my GED? Should I go back and finish that one course? Go sit in a grade 12 class with all the grade 12ers? Whatever, man. Whatever. Text on my phone, make the teacher confiscate it from me. Is that what you crazy kids do in class these days? What would be the point? Right? What would be the point at this point? Can you experience with long and short seagull strategies in the options market? I don't do complex strategies like that off the top. Most strategies, most things I do are single options. If I want to, I'll step in to a more complex trade, but I won't open one up. I'll never open a spread. I'll step into a spread. If it makes sense to step into one, I'll step into one, but I'll never start with a spread. Synthetics I'll do because, well, that's the minimum you need to have a synthetic is 2 options. But for the risk reversals are great to step into as well. Most of the stuff I do is a single option. And then I let the market determine whether or not I'm going to make money on that option or whether I need to step into something else. Okay, let's scroll up here a bit and let's answer some at random. If I do study from your YouTube, will I be able to pass it because I belong middle class from Pakistan? No, my CFA videos do not cover the CFA content. You will not be able to pass. Well, it will not be useful in you passing. You'll be able to pass on your own. I have no doubt about that. I'm not saying that without me, you're nowhere. It just YouTube will not be directly useful in helping you pass the CFA exam. Gym time. Yeah, I did mine this morning. Shoulder work today. Are you thinking to include any videos of stop loss strategies for your risk management videos? Well, a stop loss is just that. It's just a stop loss. I mean, you can program it into any trade you have is where you want your stop loss. I don't know if it's complex enough for a whole video, but okay, it's a thought. Sure. Scroll up a bit more. Want to get into derivatives trading? I'm a CPA. Yeah, that's a distance away. Aiming to do level 1, given it provides a comprehensive background. Do you suggest I focus on options versus futures versus forwards? Well, they're all derivatives. When you say futures versus forwards, those two things are the same thing. A futures contract is just an exchange traded forward contract. So they're all forward contracts. But when we see the word futures, it's no different than the forward. It just means, futures, it means it's exchange traded. A forward means it's OTC. It's between you and a dealer. I don't know that I would pick one. I don't know that I would pick one overall. How would you know which one to pick? Has the knowledge gained from CFA been more valuable in advancing your career through education and employment? Well, I've never had a job, so I'm going to go ahead and say no. Or has it been more beneficial when applied to your personal trading? Well, without the CFA knowledge, I never would have been a prep provider if I didn't, when I opened the books and I looked, I go, well, I know this stuff. I did all this in university. So I wouldn't say that it's CFA knowledge. When I came to the CFA program, I recognized that it was graduate and undergraduate finance knowledge. I just happen to have it, right? Nothing in the books other than the performance standards and the ethical standards. Take those out. There is nothing in the CFA pages that is proprietary to CFA. Nothing. Level 1 and 2 quant, any undergrad stats book will cover everything. Period. If you want to see statistics on steroids with a couple lines of cocaine, take it at the PhD level, because it is wickedly brutal at that level. Nothing in economics, it falls outside of any textbook on macro that you're going to find, not proprietary to CFA one bit. Same with equity valuation, same with fixed income and fixed income valuation, same with alternative investments or derivatives. Nothing. In fact, you go through the Hall book, it's a better treatment of derivatives than what CFAI presents. There's nothing proprietary to CFAI. Nothing. What is proprietary are the three letters, CFA. That's the only thing that's proprietary. And of course, the ethics standards and the investment performance standards. That is CFAI stuff. But everything else is widely available everywhere. Nothing is proprietary in that sense. So, for what that is. Suggested okay, Discord idea is great, and I'm truly looking forward to joining. Being positive, helpful member can't actually. Is there a time frame when it's joinable? I'm hoping that by the end of March we've got the whole structure set up and the a way to have to verify people coming in. It's not going to be open. It's not just going to be open for anybody to come in. No way. It's going to be vetted. You must be on our site to get in. It will eventually be opened to people who are not on our site, but inside the server, they won't be able to go into certain areas. But to get into the site, you're going to have some kind of education qualification. Whether it be the most easiest one to pick is an undergraduate degree. You must come with a level of gravitas to engage in the conversations. For the conversation to be useful, for it to be elevated, for it to be intellectual and useful and interesting, I have to make sure people have a certain level of gravitas with them. They come with a certain level of experience or qualifications or education. Otherwise, it devolves into, well, just go to any YouTube comment section and look at, you have great comments along with stupid, ridiculous comments. I don't want the stupid, ridiculous comments anymore where it's clear that the person making the comment has no idea what they're talking about. I want to get rid of that. I want it to be a higher level of conversation, and for that you have to get off of the public communities. You need a private community, and you need an engine that gets it done well. On our site, we have a comment section under every video, but the thing is, a comment under this video is very far away from a comment under this video, because when you're on this video, that's all you can see. You can't see. There is no conversation that spans across. This will have it. So it's a lot of thinking about how we want to set it up and the permissions. And then, of course, when people show up and say, I want in, we need some kind of algorithm that says, this is your name. We can match it up with your username. That's good. An email goes to your particular email box. You then have to go on that and click it as the second verification. Then we know. We got to automate that because we have way too many to start doing it one by one. It would be a full-time person for a year trying to get everybody in. There's way too many. So yeah, it takes time on the front end to set all that up, and then we're ready to go, and it will be glorious. I'm really, really excited. The more I learn about it, the more I think about what can be done. I draw things out on paper, and I have all the architecture, and it's just the what I can do on there beyond what I can do on the site is incredible. For instance, I do office hours on the site, and you have to be behind a paywall to get it done. Zoom and all those don't allow that to happen. So we use Vimeo, one of the few that allow a feed behind a paywall. But Vimeo is one to many in the sense that I can talk and I can share my screen, but everyone else has to type in text, much like you're doing right now. Whereas if I move it over to Discord in a particular channel that is already pre-vetted, meaning that anybody who shows up there already had the permission on the site to show up there, what I can do is hand the microphone over to somebody else. Now I can have conversations. Now it just became alive. Now it became better because I can ask clarifying questions. I can explain something and I can hear a follow-up question. And I can put a voice to the text and maybe even a video and a picture to the text to humanize the comments that are coming over. And then everybody gets to know everybody else. Huge power. Huge power. Mark Granovetter, that's it. I knew it was a G that started. Mark Granovetter, that's it. Strength of weak ties. You got it. You got it. Granovetter. Why does the Fed want to? Okay, that's not a CFA question. That's not one either. Have you ever considered writing a book? No, I'm not that interesting. Really, I'm not that interesting. And I think we're done with the CFA stuff. What do we got? 2 hours, 31 minutes. It is 9:30. I might be able to answer a few market questions. Have I got anything to deal with here? No. Oh, I got a message from Amazon from Quebec. They're shutting down their operations. Let's have a look at where we are in the market, and maybe we can answer some questions. Bonds are up nice. Look at that. ZB, the long bond, up 0.5%, 19 out of 32, 113.25. Canadian is weaker. Peso is weaker. The U.S. is stronger across the board. Bitcoin taking a dump, down 3,700. I guess the coiners were waiting for an executive order last week suggesting that the U.S. was going to buy 1 million Bitcoin. That never happened. So Bitcoin has the potential to visit 80,000 or 70,000 unless it gets some support. MicroStrategy is calling its bond. It has a $1 billion convertible that's convertible at 100 and something dollars, and it's calling it. It's called a soft call. It's calling it, which means it can call it for par. Meanwhile, it's trading way above par. That's called a forced conversion, by the way. You are basically forcing the bondholders to convert to shares. So they're going to dilute by about $1 billion, but I don't think they care. I don't think the shareholders care. Bitcoin down 37. Oh my God. Have you seen futures? NASDAQ futures down almost 2%. S&P futures down almost 1%, 56 points gone. Russell 2000 short. I'm short the Russell. So it makes me happy when I see it short. But we got an ugly market tonight. Strong US dollar. Energy is negative. Metals, all negative. Gold down 16. Copper down. Aluminum down. Palladium, platinum down. Everything down. But Treasury's up. What's going on in the world? SPY down $5.67. By the way, I don't know if you guys know this or not. Stocks do trade all night long. So you can trade them all night long. SPY trades, TLT trades, GM is up 29 cents right now. Ford is not doing well. Alcoa is not doing well. Freeport's not doing well. Who's down big time? Netflix down another $17. Tesla down another $11. $3.95 down below $3.95. That's crazy. Broadcom down another $12. Let's have a look at MicroStrategy down another $16, 4.58%. Where's Nvidia? Oh man, have you seen this? I guess all that DeepSeek release. They released a new model last week, I think, and I guess after it's filtered through, Nvidia's down $7.50 at 135, down 5.24%. Lennar down again. JP Morgan down. Utilities are down. Oh, it's going to be an ugly day. Yeah, nothing really exciting here. Everything's ugly. Good. I like red days. It's a shopping day. All right. Let's hope it carries through the Canadian REITs a bit more. They've been weak, and I've been adding, and I'm more than happy to keep adding. Let's see what kind of questions we have here. Can you do a video walking us through your investment monitoring setup? That would be hard to do. So what I did agree to do was have some people down at the house in Costa Rica, and we will do this all day long for the whole week. So I'm there for 3 weeks, and each week I have people coming in. It's a fairly big house, so I can fit 5 people in just the bedrooms that are there. So that's what we're going to do all week long. We got three straight weeks of that. To do a video of that is going to be very difficult. It's easier to do it live. You expect a QE from the Fed next week? Oh no! Oh God, no, no. Emerging market stocks have underperformed over the past decade. True, despite carrying higher risks. Do you consider them a solid component for a diversified portfolio? Not yet. Trump screws everything up because Trump's a wild card. So they sent a plane to Colombia. Colombia didn't take it. 25% tariffs. He will punish. He will either hurt you by saying, okay, you're going to take these planes are going to land, and you're going to have to deal with them. No. Well, then I'm going to punch you in the face. Okay, we'll take them. What's he going to do to emerging markets, right? I mean, now he hasn't picked a fight with any of them, but for Trump, there is only one outcome: winning. There is no method to winning. There is no limit to winning. There is no pathway you would not take to win. The ends justify the means, whereas some people would say, well, for me to win, I have to do this. I refuse to do that. Winning's not important. If I have to do that, there are some things that are more important. Not for Trump. Nothing is more important than winning. And not just winning, you must lose at the same time that he wins. Nothing is more important, which means nothing is off the table, which makes him a wild card. So who the hell knows? Who the hell knows? Who the hell knows? I don't know. He's made forecasting far more difficult. So you have to pay attention to what he does. I got an account on Truth Social, didn't want to. Now, if you want to see a cesspool of crazy, get an account on Truth Social. Oh my God. And if you want to know whether Truth Social is tracking your movements online, Google something really oblique. Like, let's say you're looking for, like, Google a product you never think that anybody would buy, such a narrow little product, and it will show up in Truth Social in your feed. It is monitoring everything you do. It is spying on your computer. It is listening in, and it's a cesspool of crazy. You have to get an account on Truth Social, because if you're not following Trump, you're missing a lot. Because sometimes in the middle of the night he'll put something out, right? And it's policy by tweet, even though it's not tweet. They're not called tweets. They're called truths. And you share your truths, and you can retruth something. Every crazy conspiracy you can think of lives on Truth Social. It's just a circus of crazy. Go open an account if you want to entertain yourself for half an hour and just read some of the posts. I hope the Costa Rica live visits become a thing. They will. This is the first round that I have down. So I've got to plan out the days and plan out what's going on. I got a lot of really neat things that we can do. The excitement of the week is going to be highly dependent on the market. I'm hoping that we have exciting markets so we can try out a whole bunch of interesting things. And the nice thing is we're going to catch the trail ending of earnings so we can play some of those momentum trades. The worst thing that could happen is nothing. Where the market is up 3 points, down 2 points, up 4 points. It's like, oh God, this is freaking boring as hell. Then we have to go into something a little bit more deeper, like starting from nothing and how do you find opportunity, right? That means from the level of the economy, zoom down to a sector, zoom down to the sub-industries, zoom down to the components, call up the Russell 2000 and the SPX and look at the companies in there, run them through a filter, try to minimize them down, go to the 10Ks, the 10Qs, and see if we can't find something. That's a fun week. It's, hopefully come out with a couple good ideas, but there'll be a lot of, there's a lot that I can do. I just don't know what it's going to look like. And I think that every week would be different, depending on the market that we have. Can you talk a little more on gold standard? Well, we don't really have a gold standard, do we? My father-in-law is a gold bug and he swears by a gold standard. It's so tiring when I'm just trying to enjoy dinner with my wife's family. Well, gold has performed well. If you look at over the last 20 years, gold has performed very well. And the belief is that gold will continue to perform because it's finite. Just because we haven't got it all out of the ground doesn't mean it's infinite. It is finite. If you go back 50 years versus today, the amount of gold in a ton of ore has decreased significantly. The yield per ton is decreasing. Much like the halving event of Bitcoin, every 4 years it halves, you have the same sort of phenomena happening in gold, that every so often the amount of grams of gold out of a ton of ore are basically 50% of what they were at some previous time. So there will be a limit to the amount of gold that you can pull out of the ground. If you want to get, if the amount of gold per ton, the grams per ton decreases, the price has to go up if you want to keep getting it out of the ground. It has to go up. So from here, unless you find big, major finds of gold, which within the industry it is believed that all the tier 1 gold deposits have been found, the price can only go up from here and must go up to meet the demand from central banks, from jewelry, and from ETFs. The price must go up. So I don't know that I would be a gold bull at the expense of everything, but I have gold. I never used to. I never considered gold before. It was like, yeah, okay, it's just not that exciting. But I think we're in a period of time where gold will probably surpass 3,000 this year, and probably by the end of the decade, 5,000 or 6,000. You could get a doubling of it by the end of the decade. And I think the same with copper. And I never used to be a gold bug or a copper bug in that sort of way, but you do need these just because of the limitation in the number of mines, the capacity for those mines, the reserve price, and the level of reserves. The price must go up. It must. Let's see. Why do you always monitor the reverse repo and the reserves? It's because as soon as the reverse repos hit zero, the reserves will start to drain in lockstep, will start to drain very quickly. If Besant does move a lot of the debt issuance out of the T-bill market into the T-note and the T-bond market, you will create not a shortage, but much fewer money market securities, which means the reverse repo will be less useful. As soon as you're done with the reverse repo, which is sort of like an excess level of reserves above the level of reserves, then you start hitting reserves. And the Fed operates in something called an ample reserves regime, so that when it makes adjustments to the Fed funds rate, it does not have to engage in open market operations, because it is on the insensitive part of the curve for the demand and supply, or the supply of reserves, or we'll call it demand for reserves. It's on the it would be the demand. It's on the insensitive part of the curve. But where is the level of ample? Nobody knows. They don't even know. So they're going to have to stop balance sheet runoff, I think, at around 2.5 trillion. Which, as soon as that reverse repo is gone, reserves are going to start dropping very quickly. They want to approach ample, not quickly and then stop. They want to approach it like this and then slow down and slowly approach ample, because they don't know where it is, right? So that they can stop at any point in time. You don't want to race to the finish line and stop and say, uh-oh, the finish line was behind us, right? So that's why I watch it. What direction do you think the world is heading in? Well, I believe it's this way around the sun, and it rotates this way. So if we rotate east to west, we're headed that way. Oh, actually, I'm in the middle, so I got to look out. We're headed that way. Yeah, we rotate counterclockwise around the sun. So yeah, I think we're headed west. Yeah, we're headed west. So I think the world is headed west. What did I just do there? We're headed west. What does that mean? East versus west? You probably think, that's deep. That's deep. What did he just say? Will small caps be more sheltered than a pullback, more related to tariff scares? I think small caps are probably more tied to the capital market curve than to tariffs. I think the whole economy is tied to tariffs, not just small cap or large cap. I think the whole economy is tied to tariffs, because it hits the consumer, not the companies, really. But I think small caps are far more tied to the level of the capital market curve. Do you believe lost decade theory following last 2 years of returns and high valuations? So what I think what they're trying to say is this: if you invest in the market now and you come back in 10 years, it's not going to be that great. I agree with that. I think if you invest now and you come back in 10 years, it's not going to be that great. But that doesn't mean each year is going to be terrible. It just means over that period of time, it's not going to be that great. And if you can avoid the contraction, I think you'll do very well. So imagine that this is going to be the market over the next 10 years. You start here. Let's see if we can do it. You start here and you end here, and it's not that great. But I think it's going to do this, and then come up to here. So there'll be some good returns, and then there'll be a big contraction, and then up we go. It'll be a lost decade because of the pathway the market takes, but the pathway is not going to be 3% each and every year. It's not going to be that. It'll be some major contraction followed by a recovery that wipes out a lot of the years, which is what we had in 2008, right? The market, if you had invested in in the S&P in like 1998. By the time you got to 2008, you were even, like you hadn't made anything. It wiped out everything. It was a lost decade. But if you have a rolling 10-year period, yes, some decades will be a lost decade because at some point you'll invest it in the high point only to have a turn down and to get back to where it was. But who invests for 10 years and never looks at their portfolio or rebalances? No one really does. So no one's going to experience a lost decade. But in terms of looking at the index may have a lost decade. All right. You seem to be doing well for a high school dropout. Yeah, PhD, but high school dropout. What industry are you looking at next for insurance? I've been asked many times to do insurance, and it seems more relevant now than ever, especially property and casualty. Life insurance is really boring and not hard to figure out. If you get property and casualty, life is super interesting. I mean, super easy to figure out. You don't need me for that. But property and casualty has some peculiarities to it. And in doing property and casualty, you can't help but do reinsurance because it is a big part. So there are certain accounts we're going to see on the balance sheet and the income statement. You have to understand the capital reserve and the investment portfolio. That's a big deal for insurance companies. And then there's a bunch of ratios that are particular to insurance companies and a bunch of peculiarities. And property and casualty, in terms of you would think that, well, everybody needs car insurance and house insurance, and so it should be fairly stable, but it is cyclical, which is odd. How can insurance be cyclical? But you do have soft insurance markets followed by hard insurance markets. So I will do insurance. There's no shortage of good material for insurance. That's a nice thing. It's when I did Bitcoin mining and cybersecurity, there's a lot of research you got to do because there's such new industries. You got to figure everything out on your own. So it takes weeks of research to get done. Insurance is well documented, well published. It's nice because there's so much secondary research already. It's easy to do. So I'm going to do insurance, which will pretty much complete the financial sector. That means that I could take the financial sector and spin it out as a separate sector for somebody who says, I just want to know financials. So in there's a 5-part series about understanding banks, a 3-part series about understanding the Federal Reserve, and something to understand insurance companies. You've got a full sector. You can spin that out for $75 for somebody who's only interested in just that. So I will probably do that. What's your take on China AI headlines hitting the tape and weighing on NASDAQ tonight? You think that's what's going on? Do you think that's why it's weighing on the whole market? You think it was just the China AI headlines? Because that came out last week. We had that information last week. Maybe it's just now that the market's digesting it. Do you think? Yeah, NVIDIA still down 750. Futures still down where they are, not changing really. Forex, Bitcoin now down $4,000, almost 4%. And yeah, well, the US dollar is stronger, so you would naturally expect commodities to be weaker and other currencies to be weaker as well. And treasuries, I'm very happy with treasuries. Finally, the negative correlation is gone. Market down, bonds, yields down, yields up. So equities are down and bonds are down. That just got so tiring. It's like, oh, come on, man. I can't win on anything here. So it's nice. Okay, I'm short IWM and I'm long TLT. So I'm going to have one of those days where even though it's ugly, I'm going to be pretty happy because I can take my winnings on my short side and go buy more of the long positions that I want. But then again, it is Sunday night. I have seen this on a Sunday night. You wake up on a Monday morning, futures are up 150 points. And bonds are down. It's like, what happened? and you look over the night, and nothing happened. The only thing that happened was 6:30 in the morning. The Americans showed up and said, "What is all this? What is all this nonsense? Don't you know that stocks only go up?" So you can't tell much from right now. That's the nature of the market. There used to be that it would carry through, but you can't really tell much right now. I think this might have to do with Trump's Friday night purge of inspector generals and the belief that Trump is probably moving to take out all the safeguards of government so that nothing stops him from doing what he wants to do. I think it's probably a slow realization that Trump 2.0 is the same guy as Trump 1.0. He hasn't changed. He hasn't matured. He's pretty much the same guy. He's the same guy. So I think there's some thinking of that. Maybe it's the raids that they've been conducting and the speed at which they're publicly, getting immigrants out of the country, that maybe that's weighing on the market in terms of the labor force. I don't know. It's hard to pick one thing. I am seeing ZQ increasing right now. ZQ is Fed funds futures, which prices in the number of cuts, and ZQ is increasing, which means the market, not only are bonds going up in price, yields going down, but the Fed funds futures are beginning to price in more basis points. January, it's 2 basis points, but still it's 2 basis points more than we had before. It's starting to price it in. Does this continue till tomorrow? I don't know. I don't get too excited about what's going on at night. It's like, it could be here in the morning, or it could just all disappear overnight, wake up tomorrow, and if I had never looked, I never would have known anything, and we could go on to hit brand new highs this week in the market. Who the hell knows, right? I know this. Trump watches the market. He watches the market. So he'll say some things and he'll watch the market. And if the market doesn't react well, he'll backtrack on some of those things. So we do have a put. It's called the Trump put. He's not going to let the markets crash without coming in and saying all sorts of things to get it up there. Although we can also say we got a big risk this week. You have Bank of Canada, you have the Federal Reserve, you have the ECB, you have over 100 companies reporting earnings, and you have uncertainty every minute of the day from the White House. Hey, so there is, and you have an overextended, overvalued market. So there's good reason to say, wow, this shouldn't be surprising, right? So I don't know what I would point to say, I think it's this, I think it's that. Do you think Trump will substantially increase volatility in equities? Yeah, because Trump is uncertainty. It's not Donald John Trump, it's Donald Uncertainty Trump. It should be DUJ, Dudge. Yeah. Do you think the EV market is propped up by government subsidies? Yes, I do. I absolutely do think it is. The taxpayer is subsidizing, or has been subsidizing for the longest time, up to $7,500 of the purchase of a middle-income household's vehicle. Every taxpayer. Subsidize my vehicle. I must make this choice to get a subsidy, and then I got to pay taxes so that my neighbor who has a Tesla, so I pay $7,500 of their car. I'm not paying it, but you get what I'm saying. It's like, I don't agree with asking taxpayers to pay for a higher end price vehicle that is not being bought by low income people. It's being bought by households who can easily afford it themselves, right? So not a fan of that. Not a fan of that at all. Saw the LinkedIn post on CFPs. Do you think we are entering into an era of CFP resurgence? Well, you do have the largest cohort in terms of generation retiring. The years 2010 to 2030, they're all retiring, 10,000 a day. And lifespans are not 6-7 years in retirement anymore. They're 15, 20, 25 years. And many of these people are not market participants. So yeah, private wealth management, I think, is going to continue to increase on a going forward basis, just on the aging of the population in wealthy nations. Yeah, I do think so. Yeah. So I do think that post is probably spot on. Will I trim my short IWM tomorrow? I don't know. I don't think so. Let's have a look at where IWM is right now. Not until I see like it's at 226. No, down a $1.92. No, I wouldn't be trimming till I saw under 218, 217, 216. No, no. My only regret right now is I don't have more. I've sold a lot of calls on this one, but near-term calls that expire every single day. So what I can do tomorrow is I can close the calls that expire on the 28th and roll them forward to next week. And then on the 29th, I close those calls and roll them forward to next week. And I just keep rolling them forward a week at a time. But I was hoping to be short some 12 to 14,000 shares. But I don't know that this is a sell-off as much as it's just a red day. Who knows? I don't know. But no, I wouldn't be closing my short until much lower than this, much lower. I don't see market updates for January 1926 on the mobile app. Yes, that has been mentioned many times, but it's a weekend. I can't do anything about it. I have sent that to IT. It's just a bug. It's probably just changing something on the site to point to somewhere else. It's just a bug. Do you still rely on CFA style fundamentals and trading options, futures, or do you resort to complex stats? No, I don't use a lot of complex stuff. If I got to get complex, I'm missing the big picture. So I'm looking at big picture stuff in terms of delta. I'm not diving into all the second derivatives of all of the derivatives. I'm not going to do that. So I don't care about charm and all of those other things. Don't care about them. I'm not a market maker. I don't care. Right. The biggest ones are implied volatility, the time value, theta and delta. Those are the big ones I play with. If I'm benchmarking, then yeah, I care about the gamma if I'm benchmarking, but the gamma doesn't work unless I get the delta move, right? So, but no, I don't really get that complex on all the tiny details. If I need those tiny details, I'm missing the big picture, or there is no big picture, and I got to go small. Not interested. Any other Canadian REITs you're adding other than Cap REIT? Yeah, that's in the positions video. I've got 5 of the 7 in Canada. There's only I got 1, 2, 3, 4, 5. 5 of the 6. There's only one I don't like. And there's 2 that I really like. What do you think of CMT? Well, I don't think that technical analysis is a thing. So it would seem to me that if you're going to add CMT behind your name, why not register at a seminary and add father behind your name, or minister behind your name? To me, it's the same thing. It's a religion. I don't think there's anything there. Okay. Do you still think it's not the right time for copper miners? Dollar has been losing strength over the last few days. It's not that I don't think I'm going to get my exposure to copper from miners. I'm going to go right to copper. I'm going to go right to the futures and just roll futures. Where are we on copper right now? 427 on the March contract. If we can get a significant push downwards on any sell-off, I would probably enter copper. I don't know about the March contract. maybe the June. But the March is the front month. It'll be the most liquid. Probably the March. I'd probably at 405 think about selling 405 puts. Well, where is June? Let's say June would be, I think June would be a little bit higher. Let's see what the contango is on this one. Let's go to more. Let's go to the June contract. 434 on 427, 6.3 cents. 34.65. No, it looks like it's a 7-cent premium. So I'd probably sell puts at 410 on the June contract, which would be about, it would be under 405 on the front month on the March contract. Yeah, I'd probably start there. I think that's a good place. And I'd probably want to be long the futures and then just roll them and continue to roll them up. You are losing the carry every time you roll them, but you can roll them. You can get the carry back by engineering your roll with sold puts. I think I'll probably do it that way. I don't know. With gold, I'll probably do an in the money put, maybe $3,000 if gold got to the February contracts at 27.61. I'd probably look at the June 3,000 if the front month got to 27, 26, 26, 20. If we got $100 down, I'd be in like Flint. I'd be in. Let's see. Any plans for CAIA? I don't really know yet. That's going to depend on some other things coming into play. Thoughts on Mark Carney stepping up? Another liberal. He's Justin Trudeau 2.0, but 5.0 when it comes to the environment. If you want redistribution in Canada for the sake of the environment, Carney's your guy. If you feel like raising taxes just to and with a focus on compensating marginalized communities for the effects of climate change, Carney's your guy. He's going to be Trudeau. I'm not going to say 2.0, but 5.0. He's another extension of Trudeau. No, I don't think the Liberal Party can win. So who cares who they put in there? But I don't know why somebody with his resume at this point, governor of 2 banks, central banks, Bank of Canada, Bank of England, why he would want to take over this shit show. He's going to lose. He's going to lose the election. Why would he want to do it? I don't understand. Anyways, we're at 3 hours here. I'm going to call it. It's been a long evening, and it's ugly out there. So, but who knows? By the time we get to the morning, it could be a completely different market. You just can't tell anymore. There used to be information, but now this could all just be noise. Who knows? I'm just going to close it. What's the point? I'll look at it tomorrow. All right. Okay. That's it. I'm going to close it for the night. Ciao.